Hello. Cheers, cheers, cheers. All right, welcome, welcome. Okay, if you tuned in earlier, I hadn't turned on the damn opening there early enough. But okay, so I actually don't know what the market did today, so we can start off with this dashboard. Commodity prices working today, which is good. Also, I moved my camera over a little bit, so hopefully I'm not blocking too much of the screen. I know I do that all the time. I can't help it. I got to get in the habit of looking over just to see if I'm blocking everything. But okay, let's see what's going. Let's see what happened today. All right, so not much happened. Again, I haven't had it too much recently, but you should have in March and April, red and green. Although I don't know how done this was, but there will be days where this will be red and green all over the place, and those will be exciting days, I'm sure. We'll spend most of the time just looking at what was moving and stuff. All right, so today, Nasdaq 100 QQQ was up 2.5%. So I feel like the past couple weeks we've been seeing what seems like a little bit of a rotation. Wasn't the Nas down a number of days in a row? And seems like the value stocks. I know there's indices to track value stocks, right? But I'm just looking at the portfolio because I'm so heavily focused to it and how the portfolio is performing, and usually an indication to me as to how value is performing. So anyway, it's been doing okay recently for now, right? That always changes with time. And I've noticed Nasdaq's been down a number of days, but today, all right, so it's up a little bit today. Now I'm curious I just want to see the chart. I don't think we've checked in on this too much. Still looks damn good, doesn't it? Still looks good. So if I do this, just get the inspect on. Still hanging in there. I mean, we talk about yeah, a little bit of a rotation. It was making all-time highs this week. But look at it. It was like 3 days in a row. I think I read that we haven't had that recently. But now it's bouncing back today, right? It's bullish. Don't get me. Ain't no tide turn yet. That's for damn sure. If we back out, damn, that looks good. Okay. Whew. I'm not really in the camp that thinks though that just because Nasdaq's up, there's no money to like value investing's performed well out of this drawdown. And you've heard me say that a number of times. One critique I had of myself is that I wish I invested in quite a bit more growthier type stocks that everyone now says is super overvalued. Because here you go, they did crush it too, but value performed well too. But yeah, if I do, can I compare this to the IWM? I think I can do this. Maybe. Yes. Oh, it's kind of flat. So this is a comparative chart where it's comparing QQQ to the Russell 2000, just the regular Russell 2000, not value or anything like that, which are the smaller 2000 stocks of the Russell 3000, right? I don't know how much of an indication this is of anything. What is this, 3-year weekly? And it's kind of flatline past thing. Like it's supposed to be that if what's in the numerator is outperforming, then, if the chart's going up, then what's in the numerator is crushing it. As you can see in 2019, it was crushing it, and it's still kind of flatline right now. If there's anything to this, we're testing it. This is us testing technical analysis too. I haven't done this too much, the comparative type charts, but of course it's, I know it's quite common in technical analyst fields. So I want to use it more just to see, just to test it. Maybe there's something to it if I use it more and more. But so you'll see me pull this up sometimes in many of the dashboard charts or stuff like this, comparing one index to another, one ETF to another, blah, blah, blah. But geez, you look at the 10-year 10-year weekly, right? Damn. And what this chart is just saying is that you would have made more money if you invested in QQQ, which is the top 100 stocks traded on the Nasdaq, I think, versus the Russell 2000, right? I mean, it's a small cap proxy. And you would have been. And so people look at this and they think value sucks, small cap sucks, tech all the way. And historically, at least this period, it's performed better. But there's been plenty of pockets of value crushing it if you get the right value stocks. That's my opinion. Anyway, okay, so I'm glad we looked at this because I've been hearing rumblings of the rotation, and they can still both go up. It's not like that. It's not like a one or the other. And you can't think like that. Keep an open mind. But even still, as far as the relative trade goes, if you're long QQ, short Russell, well, now it's that particular trade is flat. Yeah, it's kind of flat right here. But even if you're just looking at the QQQ itself, that's what sticks out to me. Is like it's not doing, it didn't do shit yet. It's right there. But the 3 down days, I guess we haven't had 3 down days in a while. I don't care to look, but that was, and then it's right back there. Just noise. Let's keep going. But really, that was the only thing that was moving. What did the market do today? Oh, up 1.5%. Oh, I feel like that's a good size move for the S&P 500 recently. That's not bad. 1.4%. I mean, that's noise. Don't get me wrong. but relatively the past couple weeks and past month or two, we haven't had huge up or down days. Don't hold me to that. I'm not totally sure. Just looking at the market, seeing what it's doing. But geez, are we right there? Oh, we're right there. Holy sh! Damn, I didn't know that. I'm glad we pulled this up. You know what I mean? Sometimes I hear stuff or read something. I'm like, oh, I should check that out. And then, damn, it's right there. Is that that's all time high, right? Shit. Right there. Look, this is okay. So there's probably people talking about this right now, right? Resistance. Are we bumping up against resistance? Did we just get through? What was this? February 18th. We've officially. Is this? This is the index. This isn't an ETF or anything like that. And there you go. Right there. Oh yeah, we'll see what happens. It's not indicative of anything. Just watching and. What the charts, what the book say is that we're bumping up against resistance. Watch what happens. Now, some people are probably saying it's going to pull back out. It could, but it's not overbought or anything like that. And it's something I'll keep my eye on, I guess. But geez, okay, all right, good to know. And now I'm just curious. Can I just pull up the? I'm not going to spend too much time. I just want to check. This is the thing. We don't have to do everything every day, but this is why I can't do too much structure. But like you need to check up on stuff. So if anything catches your eye and then you jump over to the next one, this is kind of how I do it. I'm not looking at every single thing every day. I feel like I'd go crazy. What I could do is this. Check. We could do this. Watch this. Is this weekly? Yeah, this is 5-year weekly. This ain't bad. So this is comparing S&P 500 versus the full market. Wilshire 530. Let's do this right now. So this is going to be a watch. This is a whole. There's 3 pages. So that's roughly 30. Charts of comparing. The first couple are comparing indices or ETFs or whatever the hell it is. I don't even remember, but they're broad indices, so we can kind of see what the broad markets are doing. And I have these chart lists for each of these columns here. So if you ever want to see one in particular, let me know. But we can go through debt, we can go through regional type stuff, broad indices, and in sectors. I believe this is sectors down here. Yep. And then we can do it for commodities and stuff. Usually, I'm just waiting until I have a reason to do it. I don't see the need to be too dialed into everything all the time. It seems exhausting. So if things are moving or if things are up in the week, that's the thing. Right now, it streams 3 days a week. I'm not seeing everything Tuesday and Thursday. Maybe I should. Maybe that'll change. But so in industries too, you can go through and compare stuff. Maybe that's a weekly type thing. Like maybe we do it once a week, bi-weekly, or once every 2 weeks. But today we're doing the broad indices just quick. I want to see. So this is saying S&P 500. Crushed it. People piled into the... Right, because the whole market was selling off, especially the smaller companies. And okay, but that's trending back down. S&P versus the Dow. Trend has been up the past 5 years. It's pulled back a bit. This is kind of that rotation people talking about. Dow, people think less techy, more industrially, I think. I don't know. Let's pull back a little bit. This I don't like to do daily charts for this because how can you keep up with daily charts on this? Just look at the weekly trend. Maybe monthly trend makes more sense. NASDAQ versus New York Stock Exchange, boom, there you go. That trend is still intact, still looks great. This is bullish for the NASDAQ right there, right? Oh, I'm getting cut off. Oh, I'm having some opacity issues there, I see, huh? Okay. Then we got S&P 500 versus, this is QQQ. This is tech versus S&P 500. Trend still looks good. I don't see anything breaking down. If there's anything to this, I don't know. Japan. Underperforming the S&P 500, right? And this trend is still intact, going down. Man, U.S. Everyone's been flocking to the U.S. for better or worse, long term. We'll see. Germany trend down. U.S. is S&P 500. I mean, those are broad international companies at this point, right? But they're mostly U.S. focused. Okay, Hong Kong, everything's down. This is Hong Kong S&P versus S&P 500. It popped up today. India, S&P 500, still down, although maybe turning. I feel like India is going to be, do people say this? Is it like going to be, as far as the market-wise goes, it could be like the next China, where China like crushed it. It was like huge growth periods, and their stocks crushed it as well, and their companies were crushing it. It was a huge boom period for China. Could be the next case for India, and maybe they'll be leading emerging markets. So when I see this, I don't know if there's anything to that. I don't know what the hell I'm talking about, but... Still early, whatever the hell it's saying. All right, there's the S&P 500. We just looked at that. Man, look at that drawdown, huh? This is the thing. Look at this. Look at this. Like, it's not easy to annotate. Man, can I fix that opacity thing? Maybe I can. I fixed it before. It's kind of throwing me off. I hope it's not bothering you. If it's bothering you, I think I can fix it in real time. So let me know. But look at this. If we're going to test this. Oh, I can do that. Let's do this. I do want to test this for educational reasons. For educational reasons. Let's draw a line on this. Let's get some art. Let's get some artwork on here, huh? Okay, there we go. Look at this. Support roughly right there. Not super strong support, but still went down to where it was in 2018. 1 week, only 1 week it dipped below. But if you had like some standing buy orders right at that support level, you would have crushed it. You know what I mean? So I don't know. I think there might be something to this. I don't know. I didn't have standing buy orders. I was watching it. I was definitely watching it. Maybe I don't remember how much that was weighing on my, whatever it was marginal, I'm sure. But I remember looking at it and being like, this could be support. And wouldn't you know? Damn, right there. Of course, you know what? I think I mentioned this in one of my videos. I had my eye on this and thinking, okay, this is roughly the support area. But I actually thought with all that was going on, how crazy it was, I had mentioned to some of my family that we shouldn't be surprised to see a pullback to here. I was thinking that this was a possibility, and that was part of the reason I still had a little bit of, like, I didn't go into super dodgy companies, which has been a criticism of mine, right? And I feel like maybe, I mean, this is, I said to my family, like, there's a chance we retest these lows, and I didn't think we would go below them, although that's possible, right? In a bear market, anything's possible. You can't forget about it, and but I didn't think that we would go break through here. But I was thinking, you know what? We may get down to 2,100. There's probably other people, right? This is some pretty solid support as far as what a lot of folks are saying. But so I thought we might get down here. But regardless, this was a good stop right here. And it doesn't matter that much, these fine details. Who cares? It's just things are cheap. This is a rough area that could be a good time to buy stuff. And it was. So another test. Okay. Let's keep going through. Okay, 713. We'll be quick. I want to do some new things on this. Test out what's fun to do. And so I want to go through these charts. Style. Okay, not quite yet at the all-time highs, but still some room to go up. Oh, these are weekly, up the past couple weeks. A little mini new high right here. It's a new high since I keep looking over here so I can get my pointing. So I get my pointing down right. It's a new high since the lows. Kind of meaningful. Bullish. NASDAQ still looks good. NASDAQ 100, boom. See what I mean? Look at you want to talk about 3 down days, right? Who cares? Look at the weekly chart. It's done nothing. Those weekly candles look sick. I mean, I'm not bullish to NASDAQ. I just mean sick as in bullish, right? Wilshire 5,000. Oh, right there too. Isn't it funny how they're all, I mean, S&P 500 largest companies are roughly 500, right? I know it's not exactly. But Wilshire 5,000, who knows how many companies are in that? Isn't it like only, it's definitely not 5,000, I forget. But still, those are a broader selection of companies. And they're doing the same thing on the charts. Right? They were almost the same exact spot. Shit. You could get some like rocky periods right here, some volatile, just things bouncing around, or you could get a clean break right through the ceiling, and that's bullish. We'll see. Whatever. This looks good. New York NYSE, bullish. This and the Dow still kind of look like they got some legs. But the Wilshire 5,000, S&P 500, okay. Euro next 100. See, this is kind of chugging along. Not doing much. But this is, like, I like to see this. I know these are broad indices, right? But I like to see this stuff in stocks. I feel like hopefully I've talked about this past couple of streams. Like, you don't know what to do on this first move, right? You see me highlighting. Oh, let me do this. See me highlighting this candle? Oh, my thing must close down where I can highlight. That must, you know what? I must not reboot with the computer. I've rebooted my computer. Anyway, this candle right there. Like, so you may get a move like this. You're like, oh, it's super bullish. But me, I'm like, let's just wait. And I would like this. Okay, now some time has passed. 2 months have passed. I like this. So this, not that I'm looking for good setups that much. Maybe I will as time passes. But this is a good setup. Germany, same thing. See how you're seeing a lot of the same things. This is why you don't have to, you get the idea for the trend. Here's France. You're going to see the similar things across Europe. Japan. So even though Japan underperformed S&P 500, still chugging along. Hong Kong. India. It's very similar charts across the board, right? We're all, the whole world, kind of in the same boat. Worldwide phenomenon. You don't get that all the time. Australia, looking good. That's kind of tied. That's, if I were to pick a country or a couple countries that are tied to, I don't want to say emerging, but commodities, right? I mean, you got Australia, they got their commodity heavy country, Canada. You got Russia, of course, Brazil, some of the BRICS. So those, I kind of keep an eye on those ones. Yeah, Australia kind of with the commodities, right? I don't know. Canada, there you go. Oh, that looks good, huh? Damn, I wasn't really watching Canada that closely. Both those charts look good, huh? This Canada looks great. All right, there we go. We just did our indices. We kind of got a feel for what the market's doing. What sticks out? S&P 500 is still crushing it. S&P 500 will share relative to the rest of the world, I mean. And then S&P 500 will share bumping up against those the resistance right near all-time highs. That's something. And then Dow Jones and a couple of other ones kind of lagging. Europe and the rest of the world still kind of on their way up. Everything looks okay. Nothing's crazily breaking down. Doesn't mean anything. It doesn't mean it couldn't change tomorrow. But good to take the pulse. Okay, that was good. Happy we did that. Oh, you know what wasn't there though? It didn't have how come it didn't have the sectors? Oh, you know what? I probably grouped it with the industries. I must have broken those apart. Can we do industries real quick? Can we do that real quick? Yeah, let's do it real quick. Because that was good. Now I kind of want to see the industries. Okay, let's do this. So this is energy. So I picked a couple select ones to like compare it to the market. I don't even remember what I picked. Let's do it. Energy versus S&P 500. Damn. No real bounce yet. This I mean, I talked about how this is kind of basing a little bit. Did we just hit the low? Perhaps. $0, less than $0 negative prices for certain commodities can have that impact. This is okay. It's good to know. And watch this. I can do this. So I typed it in last time. Check this. This is sick. Boom. Nice. That's one of those extensions, right? Let's look at the 10-year. So is it basing right now? We'll see. Keeping an eye on the RSI down here. This still looks bearish. I don't know. But the energy prices, energy stock, that's what I mean. A lot of people looking at this stuff, but I'm looking at the individual companies, and what you saw in March and April were ridiculously low prices. They've kind of bounced back a bit, but a lot of them are still cheap, but not that cheap. But cheaper than a lot of companies in S&P 500. So this is just something I'll keep my eye on here, because I do have some heavy energy exposure, right? Okay, keep moving. Materials versus S&P. There you go. Those are kind of turning up. I'm sure we've seen gold and silver, although they pulled back. Didn't they pull back yesterday like crazy? Oh yeah. Okay, we'll do that. We'll do that next. We got to be quick though. Got to be quick. So materials, okay. Looking better than energy, huh? Looking better than energy versus the S&P 500 Industrials, kind of those three, energy, materials, industrials, those are often the types of companies that I'm investing in, so it's no surprise that I put these three, and you're kind of seeing some upswings, at least in industrials and materials. Again, I see this with the stocks, you know what I mean? I find those, that's what I mean. I kind of know this without looking at the charts. And I don't know how much information I'm actually gathering by seeing this. I'm trying to learn, trying to test. All right, consumer discretionary, same thing. That's the fourth one on the list. I guess I listed that. But this is bullish, huh? Consumer discretionary really took it on the chin, and now turning the corner. Wow. Is that surprising? That's surprising compared to these other ones. Nice. People bullish on the consumer, huh? People were bearish on the consumer. Now they're bullish on the consumer. Okay. This is, I like to see that. That's good for GameStop. It's good for some other retailers too. I still have quite a bit of consumer discretionary exposure. Kind of interesting. But tech looks even better, right? Look, tech looks even better. This is what people are often talking about. Why invest in the S&P 500? Just invest in tech, right? QQQ or this ETF, whatever the hell it is, sector. Healthcare, kind of doing nothing. Interesting. See, crushed it at first, right? Interesting. Now people don't know what to do. Financials, Financials, energy, it's kind of grouped in with the whole value perception. Looks very similar to energy, right? Versus the S&P 500. Kind of just, is it just spacing a little bit? Could take some more time. I don't know. Communications, trend is up. Getting this techie stocks. Consumer staples. Oof. Yeah, so like healthcare, you had some bullishness there because people were fleeing to some of the safer companies. I'm sure bonds, we'd see the similar things with the bond ETFs if we were to pull those up. And but now they kind of flatline. People kind of going more to some of the riskier type things once they realize the market isn't going to shit, total shit. Real estate, getting interesting. Not performing as well as I would have thought. I wonder what this owns. What's in this? Do I have holdings in here? Damn. All right, I'll add that. Just curious. What the hell? They used to be able to. I would have trouble with Yahoo Finance. Remember we couldn't see the profile for some companies? What's up with that? It's weird. I mean, I could Google it. I don't know if I care that much. Just curious. All right, real estate. The 6 pages. Oh, that's why I can't do this every day. Utilities. All right, that's gonna see the less risky. Kind of pulling back. Is this all? That's versus S&P 500. Just to be clear, they're all bounced back. Here's energy. I'm seeing the same exact charts with the energy positions. They all look the same. They got real bullish. This is the first week of June, second week of June. Came back. Now they're kind of based, and now they're coming back up again. Something to keep your eye on. What's oil doing? Yeah, it's up a little bit. Can we do this? Can we do Oh man, look at this. That chart's so crazy that even if I go, can we just do 3 months so I can just zoom in a little bit, Wow, even that gets messy. It's kind of it's on a break, a little bit breaking out there, huh? Over the near term, it's all meaningful. It's kind of been doing nothing though, right? But all else equal, that's a little bit bullish. Okay, let's keep going. Energy, but again, I see that same thing. Okay, materials. Look at this shit. Whoa, huh? Damn. Is this all-time highs? What is this? Whoa. Damn. It's all-time highs. Wow. And that's leading. I mean, materials is the only one we've seen hit all-time highs, right? Was tech? Because tech. Right. Except for tech and all that stuff. Right, of course. What was I thinking? But as far as like the non-techies type stuff, interesting. All-time highs. It still hadn't taken out its relative highs versus the S&P 500, but that's interesting. I mean, I'd like to see that. Boy, that bounced back quick, huh? Damn. All right, what about industrials? Okay, industrials coming back. All right, so has the S&P 500 been carried? I mean, I don't know how many materials companies are in the S&P 500, but technology and materials, they're the only ones like crushing it. Industrials still working their way back. Wow, bullish week though. See that candlestick? We saw that. All right, so this is a bullish week so far. Consumer discretionary, those all-time highs. All right, so wow, things have really bounced back. These are the look at that. It's bullish. Yeah, maybe they pull back and retest, and it'll grind for a bit, but bullish. Bullish. Wow. Even though it was underperforming S&P, bullish. Shit, huh? I didn't realize these were all breaking through to new all-time. I heard people talk about it, but it doesn't register with me. I kind of just, financials still trying to grind their way back. Okay. But not falling apart. You don't want to see financials falling apart. Look out, right? Communication services, all-time highs. Consumer staples, wow, all-time highs, I think. Wow, okay. Real estate, grinding back. The trend is up. No, I'm not seeing anything. Utilities, trend is up. Retail, damn, there's your consumer discretion. So now, I think we switch over to, utilities. Now it switches over to industries, a little bit tighter. little bit smaller grouping, smaller classification of companies. Bullish. Can I really not see? That's annoying that I can't see the holdings. Is this a new thing? Does like Yahoo not offer this anymore? I'll have to get it somewhere else. Oh, that sucks. I'll just find a website. Oh, there it is. Okay, so yeah, sometimes Yahoo just weird. Overstock. Did I have that in missed opportunity? Oh, I made some trades, by the way. What's today's date? 12th. Missed opportunity. OST kind of was. I don't know if I talked about that one yet, but I was watching it late last year, I think. And then I was all that news with the CEO like say, "Oh my god." Is that another 10? It's more than a 10 bagger. Oh, it broke 100. Oh no. Missed opportunity. Oh, I never made that other list. I'll make that other list. Let me add it right at the top. Sorry about that. How many times I gotta keep reminding myself? All right. Damn, look at that, huh? Shit. 20 bagger? 20 bagger. Not that we would have had super high conviction in March. That's not the point, right? How many times can I belabor this point? But just drop the chips down across a whole bunch of them. I saw another one too. That I had been looking at summer infant. Look at this one. This one was another 10 bagger. I had been tracking that one too. I think I owned it. And just put it down. 10 baggers. Those are the ones that are 10 baggers. And I thought many of these might go bankrupt too, and some of them did, but a smaller percentage of them than I thought. And there you go. OSTK had some other weird stuff too going, but still the fundamentals look cheap. I feel like it was trading below like price to book or something. I forget off the top of my head. Doesn't matter. But retail, all right. Anything else in the retail that just wanted to? Yeah, usual stuff, right? Rite Aid, Big Lots. Wow, okay. That's not a bad. This isn't a bad top 10. Etsy, huh? That was one of those trendy ones that if I were smart enough, I would have thought through which companies are going to benefit from the current environment. But I'm not smart enough for that. But maybe in the future I'll be able to like try to jump the gun. But I didn't. Whatever. Like, I feel less bad about this, but even though I totally get it, I'm like, oh, this is so obvious. Of course, Etsy. Yeah, look at this. Quadruple. But I this one bothers me less. But still. So you got to think through, like, what could benefit, not what's going to bounce back, right? But what could benefit from the current environment. And I had been looking at APT. I had been looking at this even before. I was waiting for, not waiting, but I had expected when something arises like a worldwide type thing that this one might get bid up. Even though fair value I feel like is between, I think I thought it was between like 6 and 10, but I did think this one's going to take off. I thought this years ago. And then it just went, which is a little bit different than Etsy, which sold off and then bounced back. But typically I'm not smart enough for that. Rite Aid, Gap, Lithium Motors, Camping World. Oh, that helped. Okay, let's keep moving. Home builders, crushing it, all-time high. Home construction, crushing it, all-time high. See, some of these things we know. Consumer goods, wow. Man, the consumer, huh? This is bullish for the U.S. economy if this is forward, if this is pricing in forward momentum of the economy. Consumer service, bullish. Gaming. Those gaming stocks, yeah, those look interesting. I used to have, I don't know if I still have it. I think I still have Scientific Games, right? SGMS. But some of these they sold off too because who's going to go to casino and everything. But they bounced back. Look okay. Aerospace and defense. Yeah, let me just take a peek at this. Penn National Gaming. It turned out to be, I think I sold, and I had it in a different account. It turned out to be a 5-bagger. It was a 5. I think my average cost was around that $8-9. And when it got across 50 today, I'm like, all right, I think I could keep running. I had been trimming along the way, and I'm like, I think that's it. I think I want to deploy it elsewhere. But I thought that was kind of cool. Yeah, it was like $9.86 was the average cost basis. Look at that. I got it right here, I think. I didn't get it maybe a little bit here. Anyway, but there were a couple gaming stocks. And then what's SGMS doing? Is it in the portfolio? Do you remember? Let me look real quick. If it's not, I'm kind of confused. Oh, it's there. Okay. That would have been weird because okay, good. I did because I had been invested in it. It was undervalued. I thought maybe it got triggered on a stop loss or something. But I thought that one looked good. Gaming. All right, that's good to know where gaming's at. All right, it makes sense that Penn still Penn could crush it over the long term. It could be another 10 bagger from here. I don't really know the industry that well. I just bought it because it looked, especially they had that acquisition. Some of those, sometimes a company will do a big acquisition, then something happens in the market, and the market penalizes them for it. Sometimes justifiably so, but sometimes not. And then I thought, shit, I might be overdone with Penn. I was trading like $4 or something crazy, and then Portnoy, and then people just piling on, just thinking, I don't know what, I don't know. Markets are rational at times, right? Of course, that's why we're here. Aero defense. This chart looking similar. It's looking similar to everything. Everything transports. Wow, kind of bullish for industrials, you'd think. Wow, 7:30. Okay, this is a chart day, huh? I feel like if I don't know. Shipping. Oh, I have this one. This is just a ticker. This is a company. I was looking for none of the. I don't even know if there's an ETF out there that tracks shipping, and I thought this one's a good enough proxy. It's an actual company. It's the largest shipping company. And I didn't buy it just because it's so damn big, but I wanted to. I'm like, all right. I mean, I figured it was going to survive, and then here you go, a nice, clean, relatively low risk double. I thought, but tied to the worldwide economy and stuff. You've probably seen this MERSK on the side of shipping type things before. Looks good. Looks good. I'm not predicting anything, right? I'm just being like, all right, looks good. Is this all you do? Is it technical enough? Yeah, it looks good. It looks good too. Internet? Hey, internet. All right, bullish on the internet. Cloud computing? Oh, okay. Kind of faltering there a little bit. Bullish. Innovation. See, usually this isn't that. I hope you don't mind me going through this. This isn't that beneficial for me. I'm not going to remember this stuff necessarily. What I'm going to take away from this is just that things are still. It looked pretty damn good, and this one broke. And but if I were to come across an individual company that looked compelling for whatever reason, it was a big up move or insider buying, whatever the hell it is, then I'd back out and be like, all right, let's take a peek at the industry or the nearby industries and the sectors and stuff. Then I'm looking at it for a reason. Here, just scanning it, I don't know how much value I'm adding to my process here. Excuse me, testing it. Semiconductors, it's kind of a risk-on type thing, right? Right at the support. Boom, support. Jeez. Robotics, bullish. See, there's probably some of these that aren't at support, right? I'm only pointing out the one. Isn't that confirmation bias, right? I'm only pointing out the ones that I am seeing support, but I'm sure if we were looking, we'd say, all right, well, that one's not support, so how do you predict that one? That's a fair point. I don't have a counter argument to that. All right, hack, cybersecurity. Oh, one of the cybersecurity, this is kind of relevant because one of the companies in the portfolio, it's now the second largest company in the portfolio. I don't know if you saw CNR, but they reported results last night and crushed it. And it got bid up quite a bit this morning and then pulled back a little bit, but I think it's now the second largest position. But anyway, yesterday I was trying to check out the investor page and in preparation for, usually I don't know when these earning releases are going to be, but someone mentioned it and I thought, oh yeah, and that's a relatively higher conviction play, CNR. So I'm like, do I add before earnings? Not that I don't know anything about that, but I have long felt it could be a larger position. And I did add. I think I added in a different account, I think, in CNR, but I'm going to add more. Now I liked what I saw, and it seems like the trend's still intact. But anyway, when I went to the page yesterday, getting off track. When I went to the page yesterday, you couldn't get to the website because it was down because someone had hacked them or something. They had to release an 8K to talk about it, and that was weird, not being able to get to the website. I thought, oh, that's not good. And then here you go, cybersecurity down. Zero correlation, but I just thought that was funny. How I've never seen that before, where, biotech. No. Pulling back a little bit. Kind of a risk on. Remember, that's in my risk column. Still looks good though. Could be a buy. Hell, right? Pull back a little bit. Biotech general, same thing. Pharma, kind of flat. Whatever. Medical devices. This one's long been bullish. I've been bullish for a long time. Then it pulled back. This was a good opportunity to buy the damn sector or index or whatever, just because it was such a bullish trend prior. Insurance. Oh, it's going to track financials. No surprise there. Bank, same thing. Kind of grinded. They've been slow moving, right? Regional banking. I'm not really into the financials that much. Real estate. U.S. residential. Oh, not as interesting. It's what is it? What are these invested in that they're like all my real estate related tickers are crushing it. Home built, like building products at home, but the actual real estate ETFs, what the hell's in them? Is it like actual? I don't even know. I should know. I don't know what are these companies. Oh, what are they? Is it worldwide? What are these tickers? Oh, international real estate. Oh, it didn't say that. Hey, that's... Oh, do I get the wrong name? My bad. This is a little bit different, right? That explains it. It says U.S. Did I get the two mixed up? Okay, well, that makes more sense, right? I just would have been surprised if a U.S. real estate ticker... I got to fix this. Let me make a note. This hugely important note, right? Okay. I may never get around to fixing this, but I got to at least document it for my own sake. Whatever. So trivial, but keep it going. All right, last page. Let's go. There you go. Oh, it's the same. I just got the wrong. Did I forget a letter? Let me do this. Shift Command T. Open up the previous tab. All right, let me do this. Spider, Dow Jones, U.S. real estate. Don't care. Moving on. Anyway, this one looks a little bit better if that's... Well, this is real estate. Looks the same chart. It's the same damn ticker. Come on. So I just don't know what the U.S. one. Real estate ex-U.S. Yep. International. Now these are some of the same things, right? These are good. They're up. Trend is up. But these, I feel like U.S. residential real estate. So I do care. It's not that I care about real estate because I feel like what is... a good chunk of the our economy is tied to real estate, right? I'm thinking of the people building it, and then a lot of people want to buy the homes, and I mean, and consumers generally, right? Of course. So what are we 67 or 60, 70% something? Are the U.S. GDP comprised of consumer spending and that type of stuff, and that includes homes and stuff like that. But real estate, I feel like if real estate's holding up well, it's one of the main ones I look at for trying to predict a recession if it's in the cards. And some folks who are smarter than me that will eventually will read their work during the stream at some point. Someone like Bill McBride, Calculated Risk, and Logan Moishtashami. I don't even know how to say his name. I apologize, Logan. He's a bright guy. There's like a handful of folks like that, but I checked them out just to get their pulse on real estate and what they're thinking, because I feel like that's, I don't know. I feel like that kind of, if you know what real estate's going to do, then maybe the market's going to keep it together. Could be a bull claim. Not sure. REIT Global. Okay. All right. That's it. Whew. Can we do... I'm getting tired of looking at charts, huh? I honestly don't feel like doing commodities right now. So we'll do commodities another time. I'm kind of curious, but that took it out of me. I can only look at charts for so long. But I do want to let's look at natural gas. So natural gas down today, but still, this is looking good, huh? Boy, I have been looking at commodity charts a lot lately. I guess that's because a lot's been happening, and I have exposure to it. So I'm kind of curious, but this is holding up. I mean, it's kind of coming back down, but natural gas, the price itself, kind of volatile. We'd be more curious about what are the underlying companies doing, RRC. This is looking good. It's staying at its... got those options. Got to trade them right. It broke through a little bit, but it's kind of... Then it was down the other day, but that's kind of like holding. It just needs time. We just need time to see what the market's going to do with it. I personally think it continues to remain super bullish, so looking out 6 months, which I'm trying to do my best to assess, it looks good, I think. And then let's look at a couple other ones. Boy, I've been looking at these natural gas tickers a lot. I know I have. I guess I'm really interested in it because I feel like it could be a multi-year crushing it. Again, if we back out, let's back it out. We got to back it out. You need context for these natural gas plays. You know what I mean? Let's do 10 years. It's freaking crazy. Look at this. See what I mean? Like, this is what I'm talking about. So this is why, I mean, I'm curious about next 6 months or so because of expiring options and stuff, right? But there's a case to be made that maybe I should roll them over. Roll them over to a longer maturity or expiration, excuse me. So I'm trying to, but I can't do it right now. Not like I would want a major pullback before I did that. I can't make these incremental purchases. It's too frustrating for me if it pulls back. So I'd rather just buy the stock at that point. If it sells off and there's an opportunity, then I might dabble in the options. But it's hard for me to just roll them over with the price still amped up and the upside volatility increasing the cost of the options. It's not worth it. But as far as the equity goes, I'm looking at the equity. Like, I'd like these breakouts look legitimate. This looks interesting. Let's do some artwork. I don't know. There's something there. You tell me. What the hell do I know? This is a weekly chart. And how about the monthly? Oh, is it monthly? Oh, it's weekly. Monthly. Let's do that. Same thing. See what I mean? And I'm just on the fundamentals already look somewhat cheap. And then you have coronavirus, everyone, and then the oil supply cuts. And then the accompanying natural gas production gets curtailed and natural gas supply gets cut. And then demand bounces back because everything was shut down. And then the economy's trying to bounce back. And then this is the thesis anyway, right? And then combined with that, the industry has been walloped for 5 years. And it has taken longer than I think a lot of people thought. And now once it does turn, it would take time. It's not like it's going to happen in 12 months. But you could be, I'm not saying you're going to reach these prior highs, but many of these will probably still be 2, 3, 4 baggers, I think. So I'm looking at the stock on some of these, if you can believe it. And you already know that RRC is, I have calls, but in the Roaring Kitty portfolio, RRC is what? Oh, can we sort by 2? Number 5, 2%. And then they have other natural gas players down below. Down in total, it's probably maybe 5% of the portfolio or something in the Roaring Kitty portfolio. But I have more exposure elsewhere. But this looks good. So anyway, sorry, I know I'm getting myself sidetracked here because of. Let's keep going. 744. Oh, we gotta go back. Okay. In gold, so let's take a peek at gold. I did see that in the news. Look at this. Look at that. Remember what we said? Okay, so this still isn't what we say, like 1800? Saying right around here, right? Yeah, this is good. Plus you had such a we can check the stream, whatever the hell I said, but I didn't predict this pullback, right? What the hell do I know? But I can't buy. I can't personally buy on this type of an uptrend 2-3 weeks straight. What's that? The gambler's fallacy, right? What with the RSI here, it's like that's not my style. I can't do that. Maybe there's day traders or something who can profit that way, but not me. This would be if I did that and then this pullback, I'd feel so frustrated. So anyway, instead it's not so much of making a prediction. I'm just saying, let's just wait and see what happens here. But I'd much rather have a pullback before I start making any moves. And so you got it. And there's a case to be made. Maybe I should have been trimming along the way, but in that case, I didn't but I don't regret it because I feel like I wish I had more gold exposure, and it was a little bit of a mistake on my end. But that's why I knew gold was the top position in the portfolio for a little bit. But this right now is bouncing back at this is daily, right? A big down day. One of the biggest down days, I think, since 2013. I think I read that. That's a big down day. And in the miners, and I know silver, let's pop that up too, just separately. Look at that. It wasn't a kiss in 30. Who did it get 30? Oh, it didn't make it. Big round numbers. So they say the market cares about big round numbers. But to get right there, was it 29.91? There would probably some. If you were doing a stop loss, not a stop loss. It's just a sell trade. You still call it a stop loss, a stop order. Put it above 30 or below 30. Maybe people will put it below 30 in those big round numbers when they sold off. But so silver is kind of hitting this. This isn't much support, right? It's only a damn week. You need the weekly. Oh, precarious. I'm not making a prediction. I have some silver exposure, but in gold, yeah, I don't know. I'd like it. Let's come back. Let's come all the way back down. Let's get it washed out, or just time passes. So this is the thing. On some of these charts, right? It's not so. I mean, I'm looking at talk about support and trends. Here we are, 7:45, and all I've been doing is talk about damn charts. Wow. The me of like 5 years ago is like, what the hell? What's going on? It's not always about what the price action is doing. Of course, that's hugely important, but just the passage of time. Sometimes I'm just like, we just need to just see what happens over the next couple of months. And no matter what the price is doing, I may average into it. It's like, all right, things have stabilized a bit. Clearly, the trend is still intact. Things are still moving in the same motion. We're 1 month, 2 months closer to whenever my thesis was going to unfold. Average in, buy more. And that's the thing with gold. It's like this was a huge, powerful move that's hugely bullish. This is a hugely bullish RSI down here. And it's like, all right, so this trend still seems like it's intact. I would wait for the pullback, wait for more time to pass. I'd buy more. I probably would. But I have to say that the miners themselves don't look super cheap anymore, and that pains me. And then it's more of a thesis play, and it's lower conviction for me. Here in March, high conviction. The miners were cheap relative to a lot of things, book value, historical earnings, that type of thing. But they start getting beat up, they're just less cheap. Not expensive, just less cheap. And I like really cheap stuff. But still, it could be triples if gold takes off. I mean, this is you back out. This is bullish for gold. Don't get the wrong idea. This is you break out to a new all-time. This is we were looking at this too. I want to see it pull under 1900 and it did get under 1900. I think here though. Look at all the. I think I might like it around here, sub 1800 maybe. But look at these RSIs though. Is this weekly? Maybe that'll keep rising. Oh, maybe I don't know. Something to keep your eye on here. These RSIs. Miners were super cheap. This was an easy decision. 2015, so easy decision. And I wasn't really doing much here. I think I was just taking the hit. And then this was an easy decision, although I kind of messed up on this because I think I said I wasn't paying attention to that closely. And then this was kind of a good decision too, late 2019 when it was breaking 1400 right here. Big move, and then boom, 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 right? But some of the miners, I don't know. If we can pull up the fundamentals. I should do that if we remember. Do I have an ad hoc one open? No, I don't. Let's pull up. What's a good one? Gold. We could do Newmont. We can do Barrick. We'll do Newmont. Newmont's a pretty solid U.S. company. We'll pull that up there. Haven't looked in a while, but okay, solid pullback. That's a good thing for let things clear out. Let's see if the stream slows down too with me. Got all these windows open. All right, platinum. Oh, what's palladium doing? Boy, not as it's not looking as good as gold. Interesting. What is this, a flag or something? What do you call this? Flag? When you go in like a triangle, a bullish triangle or something? I don't know. Could be a buy opportunity right here. I already have what's SBL doing? Oh, that's the wrong ticker. Just bumbling around. Opportunity to add. I liked it under 10. I still liked it under 10. I think I added. What is it in the portfolio? It's up there. It's almost 1%. It's not bad. Yeah, that's my play on platinum, and it's a risky play, don't get me wrong, but that's my platinum palladium play. I mean, are there even other plays out there for palladium? I don't even know. I mean, there's indirect ways to play it. This looks interesting. I don't know. I'd like it. Maybe I'd like it under 10 again. I think I'll keep my eye on this. I don't want it to the buy list necessarily, but okay. I also think it could be worth quite a bit more. Great opportunity to buy right there. Yep. Easy to say now, but it did look it. Damn, look at that. Trading below $4. Couldn't believe that. Interesting. This one looks interesting. Oh, sorry. All right, let's finish. What do we get? Let's finish up these damn commodities. Lumber. Damn, lumber crushing it, huh? Whew. Oh, wow. What do you do with that, huh? What do you do with that? I mean, anything dealing in this. Well, if you have lumber as an input, beware. But this is bullish for residential real estate, right? Because they're piling up the lumber. Really, anything in this supply, anything in that real estate supply chain, really, right? Lumber. I mean, that's or CNR too, kinda. They got windows and a whole bunch of stuff. Check them out. They got like number one in a lot of things. Doesn't mean it's a good buy or anything like that. But if you've seen me mention in the streams, like I like to see solid positioning within an industry. But okay, damn, lumber crushing it, huh? Whew. All right, was anything else? What was the other thing? Oh, corn. What's corn doing? Remember corn with GPRE? We took a peek. I think this is a good buying opportunity. I think. How do you play corn? Wow, GPRE still crushing it, huh? Okay. What's ADM doing? Archer Daniels. Wow, got into 30. Good company. I remember I believe I had bought it before this was announced, but Buffett had said this was the type of company he'd want to buy. It's a big company, but it was like I bought it here. Look at it. It was trading at $20. That was ridiculous. Everything. I've said that a number of times, right? 2012. A lot of things were cheap. And but it was like trading like $20, $25. It was stupid. Well, what about dividend adjusted? Was it? Yeah, 20. I was gonna say $20 sounded real low. It was trading like $25. That's what I remember. That was cheap. Like a big solid company. It was kind of weird seeing it, but it's not worth much more than 50. I think it was like $60 max. So I haven't even touched it since. I didn't buy it here, but big company. But they deal in a lot of commodity type stuff. And corn's an important commodity for them. All right, okay, that's enough. Solar, what's solar doing? Gonna track oil. It's one of those alternative plays. If I feel like alternative's a little bit in. Oh, you see Tesla's gonna do a split, huh? And rare earths. Okay, I can't do any more charts. I don't think I can. Innovation, I don't care. Semiconductors, we saw. Baytex. Oh yeah, what's this one doing? Oil. They got other stuff too. Oil sands could be a buy. Are they buying? I don't think they're buying. I feel like I looked at they're like an off the beaten trail oil sands play. Oh no, they didn't buy it. July 6th. I definitely looked at them since July 6th. If I saw some insider action, I might get interested. But other than that, I have so much energy exposure. It might even be in the portfolio. I'm not even sure. Okay. But Sibanye up today, 2.5%. Lumber, of course. Remember, this is the risk column. So like you see green, bullish. Tesla was up 13% today on that news. What? Oh, I thought I started up like 5%. What's the intraday? What did it do? Whoa, went up another $100 after I saw. Bullish. I know. So this is like we talk about how GameStop's a divisive stock, right? This is quite the divisive stock. I mean, GameStop even less so compared to this. Tesla's ridiculous, right? I mean, value investors like. I know everyone's so bearish on it because the value is absurd and everything, but this one, I mean, there's other factors besides value, and I think it has been a huge mistake to be short Tesla. I've never short Tesla. I think it's crazy. Maybe eventually you'll be proven right, but I'm sorry. It has been such. Maybe eventually it would pay. I don't know how people do this. Maybe there's really sophisticated ways that it hasn't been such a bad trade. But I've always looked at this and I see people talking about it and I think, what are you doing? And then the whole time it's holding up those long-term trends. And I know Musk and he's talking about all this stuff. And then it breaks out late last year. It's like, you can't touch this. Get away. And then it comes in, then it retests. I know look at even I said this in one of those videos. I can't believe I didn't buy Tesla. I didn't think it was going to jump up this much. That it was going to go 4x. I didn't think that. But it broke out, which was super bullish. Just remember when gold broke out about 1,400. These are really meaningful numbers in the market's eyes, and it's a mistake to discount that too much. And when it took off, I mean, that was absurd, right? and then they do an equity offering, and then it came back retested with everything else that was selling off, but it hit support at the previous breakout. It's like classic technical analysis stuff. That's the thing, like Bitcoin too. It's classic technical analysis stuff. I mean, I'm a technical analysis idiot, and if I'm picking up on it, I'm like, oh, this. But maybe it's going to eventually work out for someone, right? Because you remember the real estate trade back 2004, 2005, 2006. You looked dumb for a number of years. But this has been, I feel like people have been short Tesla for like 5 years now. It's getting a bit absurd. But I know short the real estate housing market, that took a while too. And eventually it can pay off big. But that's the thing. I don't know how people smarter than me can probably play it big. But I'm too dumb for that. But this is all bullshit. Can't look at that. And then it pulled back, right? And then I did see it in the headlines. Oh, Tesla pulled back. I'm like, what are you doing? This is bullish. Now, see the RSI, I guess I would keep an eye on that. Well, right through February 18th. And that's the thing. It's sold off, right? But everything else was selling off too. So it's not as bearish. Now it's overbought again. Boy, if you're bearish, you better hope it doesn't take out this February RSI. It's already taken out the all-time highs. But 2,000 seems like a nice big round number, doesn't it? 1,500, less slick. 2,000 doesn't seem 2,000 might be the number where maybe stuff happens. I have no idea. Oh, but then you back off to the monthly. And the monthly, look at the monthly one. So not quite. I remember that run in 2013. But this is bullshit. We've already taken out the monthly. We've already taken out the monthly overbought. Shit, that's more meaningful than the weekly. So the books say. Sorry, get off. I didn't realize 13%. No position, bullish, decidedly bullish, and very risky to be short right now. That's I know everyone says that. That's nothing profound. Nvidia, wow, AMD. These are trendy stocks. Bitcoin Trust. Yeah, what's the Bitcoin Trust doing? And what's Bitcoin doing? Can we take a peek at that? Wow, an hour of looking at charts. Keep on looking at that clock. I can't believe it. Bullish, bullish, bullish. What's that trust doing? I may take I may have to add this to the watch list. Wow. Am I crazy? Am I crazy? Call myself a value investor. To the ad watch the buy list. That's all. I'm just watching it. That's all. Right? Oh, momentum. Hanging in there. Kind of bouncing around. I don't even know what the hell this invests in, right? I don't know. Momentum. What's Toll doing? Solid value firm. I respect them. Look at their historical performance. Pretty solid. A proxy for how value's doing. A proxy for how the Roaring Kitty portfolio is doing. Wow, nice bounce back. Yep. If you want to know how Roaring Kitty portfolio is doing, you can just watch Toll. Man, they got whacked. I remember looking at their how much the fund assets or something. I couldn't believe how small it got. I thought, oh, that's wow, all the way back. They went all the way back to what they were 2012. That sucks. See, then when people talk about value struggling, that's I mean, it's now bounced back, right? But still, that's rough. But anything else here? Oh, Hussman, I wanted to check. What's Hussman doing? What to make of this, huh? Hussman. Once Hussman starts outperforming, oh, okay. Is it happening? He's probably got. I think he's got a whole bunch of gold miners still. But a bright analyst. I know. Look at that performance, huh? Damn. That's rough. That's rough. Is it? Yeah, I don't know. I'm kind of like, when that starts breaking out like that, once it's almost like changing of the tide, right? When it's, I don't know. But definitely a value manager. better or worse? And all right, we got to keep going. 8 o'clock. Okay. Let's start with some daily mover. No, you know what? Can we just start with this? Start with this. We're an hour in. Okay, so I did add added a little bit to CNR today in the Roaring Kitty portfolio, and what else? I think did I listen to some of my notes here? I didn't really dig much into these. I did add to Maxar, CVGI, GI. Oh yeah, we should take a peek at those. Oh, I didn't buy VSAT. I kind of meant to. Did we add that to the watch list? Hey, check this out. If I go to Dash, and then I go to... Oh, where'd my plus signs go? Script running? What the hell is that? Sorry, what's going on? Oh, I wonder what happened to my... I usually get some plus symbols there to add stuff to the buy list. Running script. Why is it saying that? Does it think I'm clicking that? Okay. Well, sorry. I don't know what's going on there. So try to open that back up. That was weird, huh? The heck? Looked like it was kind of breaking on me. Let that open back up. Oh yeah, didn't we open up one of the oh man. Oh no, we spent all our time looking at charts. Come back up. Did everything just need a refresh? Okay, looks like Google Sheets just took oh, I get my plus symbols back there, and looks like it just kind of messed up a little bit. Oh, I haven't seen that before though. Not like that. I mean, I've seen the fundamental report break before. We just saw that the other day, didn't we? But that tracker sheet, like run scripts, I don't have anything set to run at 8 o'clock. I have set stuff run. I've automated it. I've automated the scripts that run behind the scenes. I had to automate that. I used to do some of this stuff manual. What's wrong with me, you know? And then I had to automate some stuff, and so I got some scripts running in the background, but they're usually timed and different times of the day. Not right now. I wonder if I click something. Maybe I have a hidden script. Sometimes I have. I got some. This kitty right here is a script. If you saw those chart videos or the spreadsheet videos, maybe I clicked that by accident. But I have like scripts hidden throughout here, where if I click a button, like runs a script. I don't know. Anyway, did this fix now? Oh, it did. Okay, so just quickly, I'm all over the place, but let's look at Newmont right here. Wow, so revenues are bouncing back nicely. Look at that. What are they up? Almost 50% the past 2 years? That's no joke. Still, look at these gross margins back then. Still got some... What's going on with my screen there? Tangible book. Not even back to where it was back in 2012. Gonna generate... Wow, it's trading at $63. That's not that cheap. So this is the thing. You talk about what could gold go to. In theory, it can go as high as an asset can go to anything, right? But commodities, they are tethered to the cost of production. They will always revolve around the cost of production. That's as fair value will, at least. And you got cheaper oil prices and cheaper extraction costs and stuff. The cost of production used to be, I mean, I've long in my head had cost of production pegged to around $1,000 or so. Some of them, and then they talk about all-in cash costs, and it gets messy and stuff. But I think cost of production is in the $800 to $1,200 range. Is that still the case? I haven't researched it closely lately, but if that's still the case, it's hard to justify. It's hard to justify $3,000 an ounce, and I know a lot of the thesis is the devaluation of the dollar, and that starts going, it's inflation and blah blah blah. I get that part. Because of course you expect the cost of production to rise too. That's inflation, right? Because everything's just that's costing more because the value of the dollar is going down. And if that happens, Still, the value of gold will be tied to the cost of production, and it's the cost of production that's rising in the value of gold on the spot or futures market rises commensurately. But it's the cost of production that really matters most to what that value is. And as far as I can see right now, that cost of production is still around, I don't know, I think 1,200. I should check. I should look into it again. And when I think about that, and then I see gold at $2,000, I think, okay. But it can get ahead of itself too. Remember, it sold. It got bid up to $1,800 an ounce, $1,900 an ounce at the cost of production. But even at that time, cost of production was like, yeah, I'd like to see a historical chart of the cost of production of gold over time, because it never seems like it got to a huge multiple of cost of production, right? Yeah, I feel like even in 2012, 2013, the cheapest it might have been was $400 or $500, and at that point you're 4 times. I guess that's so. If you could see $3,000 or $4,000, but that's speculative. You know what I mean? If you talk about fair value, it's you need to be predicting. I'm just ranting now, but I'm trying to think through gold out loud here. You need to be predicting rampant, not just inflation quite a bit, but I mean a secular bull market in commodities too, and a bear market in paper assets. That kind of rotation can help too. It gets messy, but I don't know. But cost of production is at bottom of what the fair value is, just of anything really, but for commodities, that's where it's arguably the most relevant for someone like me. All right. So are they making? Is there any even free? It's real tough. These aren't great companies, as a lot of people say, but can be tough too. Not tough. I mean, it's generating simple free cash flow. Newmont is. That's kind of telling to me, and it's been doing it for 5 damn years, 6 years, 7 years. Wow, that's real nice. What did Newmont get down to? Yeah, not that cheap. It's cheap, but not that cheap. It didn't even. It wasn't even close to. We're still trading a 1.5 book, which is a good chunk. Newmont's kind of a higher quality producer, but definitely generating legitimate earnings. $4. I don't know. Maybe there's some gains or something in there. I don't know. But book value is a pretty decent proxy right here. But what happens is it will get ahead of itself. But it's hard, like 3 times book. I don't know. That's not that cheap to me. And then the bulls would say, well, book value doesn't fairly reflect the current price of gold and so forth. I get that. It's hard. I can't be. It's hard to be bullish on Newmont at $63. You have to be really bullish on gold, which could happen. But it's a little bit of a different play. That's what I mean. I'll dabble across a couple of some of the more speculative gold miners, and that's my play. But the gold as like a asset allocation type strategy, I don't know. But do you see this? There's nothing super cheap about this. You look at a PE, okay, yeah, it's trading at 10, 15 times TTM earnings, and if you expect earnings to grow, it's going to be cheap. But that's not really what I do. And look at simple free cash flow. Simple free cash flow, it's maybe $2 or $3, then still not that cheap. You'd have to be pricing in growth, which is a legitimate possibility, but I don't know. It doesn't look that cheap to me. What'd they do? An equity raise? What's this? They raised equity last year, or was it did it merge? Did it merge with someone? I think it may have merged with someone. Maybe they issued more. I bet they merged. Was there no, Barrick Gold merged with Randgold. I remember that. But did Newmont merge? Oh, Merg. Oh, who did he merge with? Oh, yeah, Goldcorp. There you go. So I bet they issued the shares with that. Okay. See how you can pick up on some of these things just looking at the numbers. Because if Newmont was a dodgy company, they may have issued these shares to save themselves. But Newmont's, as far as in the industry, a decent company. So when you see the share count jump like this, something else was going on. And I just couldn't remember which company it was. It was Goldcorp, which was also a big company. They call themselves the largest now at it. I thought Barrick and Randgold were bigger. What's this? I believe they merged it from Newcon, thereby creating what officials have said. So yeah, it could go either way. How do you measure it? Is it by ounces in the ground? Or, I don't know. Doesn't matter. Okay, so this is a little bit of something to bear in mind. A little bit of duopoly. Maybe not. There's plenty of gold producers out there, but they're going to have a good chunk of the gold reserves. You know what I mean? Like they're consolidating. It's an older and more mature industry. We were talking about this with Western Digital and Seagate, right? But as far as the companies go, they could either they'll probably be worth, looking out whatever time frame you want. They'll probably be worth significantly more at some point, and then worth a lot less, because it just depends on where you think gold's going to be. Sorry. Because then if all your assets are gold, I don't know. I don't want to go down that path. Anyway, I look at Newmont. I don't see it's that cheap. It's probably mirrored with other firms too, except with New Gold, I know they got some business turnaround they're trying to work on too, and that they're not even close to. Wait, is it at all-time highs? No. Oh, getting close though. Oh, it is at all-time highs. There you go. Wow. Barrick Gold's not. Interesting. All right. Silver? Pan American? All right. Okay. I think, oh yeah, you know what I was thinking? Oh yeah, so let's I definitely want to add VSAT. That's what we were going over there for, right? Let's do this. If I click buy, watch this. Is it going to bring me? That should be running a script. Should bring me over and then bring me down to the bottom. Yes, see that? Oh, you couldn't see it. Sorry about that. It brought me down to the bottom, to the bottom of the green column, so I can just type in. I don't think I added VSAT, which was a mistake, but I want to add to that. I think that was we did some good analysis on that, I think, and it's not in the portfolio yet, right? I forget. Oh, it is. Is it? I forgot. We certainly looked at that the other day. I just forgot. It's embarrassing. Oh, this is the buy list. Right. Oh, so it's already... Oh, because I just added to the buy list. Is it in the portfolio? No, right? What is wrong with me? We definitely just... Right, it was a super small position. Wow. Okay, so I want to add to this. I think we saw enough that I think that we should add to it. I think it was a question mark before, but I'm going to reiterate. Add VSAT. Add to VSAT. It should be bigger than that. In Klarman, we trust, right? I think we saw enough to think that is a good place to park cash if there's not significant upside. That's what I mean. If we see something more compelling and we want to rotate it out, no problem. But as far as just chilling, we can put it in there. And then the other one that I wanted, I think, remember Party, PRTY? We were lamenting the miss, and we saw Cliff adding to it. I think it might be a buy. He's buying. What did he buy? 640K? I mean, just a small percentage of what he was. Oh, he bought more than that. He bought an extra $1 million. I think it's a buy. You gotta suck up. You gotta swallow your pride. You gotta swallow your pride on that missed opportunity. Missed the 10-bagger. Missed what could be a 20-bagger. It sucks. But this looks kind of bullish to me. I kind of like this. Would have been nice to get it down here, but he hadn't bought at that time. I really would have wanted to see. There's no way I would have pulled the trigger, but I had been looking at this back in the day. Remember, they were buying in the $2 range, still above this price. And clearly he likes what he sees. And if they're not going bankrupt, which now is looking less and less likely, this is undeniably a more bullish trend. And I really doubt that he'd be dabbling in that. And now that we know more about his background, right? We looked into his background of... he's kind of an expert on these types of plays, so it seems. I'm still surprised I would have missed his background, and not been more bullish about it at those lows. Remember, he timed his lows perfectly? Crushed it. Nice job. Oh, this one, but more so, okay, only one purchase. Well, he did time this one well, right? But more so the other one home. This one doesn't look as compelling to me anymore. Wow, crushed it. This one he crushed. Nice job. But now I think PRTY, I think that's worth getting a small position, getting it going. Then we get a story out of it, for the story. We can add it to the buy list here too. If we ever look through this, will I ever do that? I don't know. So I'm just scroll. What I do is I just scroll to just so you can see. That's where I added VSAT, and then I add. Can't believe I'm out of this at this point. It is what it is. It is what it is. Okay. Any other notes that I wanted to touch on here? Oh, add to Tenneco. Missed opportunity. EDUC. Sit on Vapo. Oh, what Vapo do? It's kind of flatlining there. Oh, but remember we saw that in that fund adding to it. That looked interesting. BXC, trim BXC, right? Question mark. I don't think it's doing anything right now. Is there anything else? CVGI. Oh yeah, so CVGI holding up well, huh? That's good. Real good. Oh, it closed at a new near-term high here. Good. Okay. I was hoping to add more in the pullback, but it's already a good size. Not a good. It should be a bigger position, but I was just trying to. How big is it? Oh, I hate the scrolling. It's not as big as so it's up there. It's almost 1%, which isn't bad, but it should have been about. See, the sizing of the positions is important. It was a higher conviction small cap play. It probably should have been about 25% bigger. And that's what I mean. I'd love to add on a pullback. We might still get it, but this is a good sign of things to come. I believe I added right in this. Maybe it was back in June. I added. I think I missed it in July, but this is looking good. Again, still a good sized position. It's right. If it's on the top of it's on the list there without me scrolling down. Oh, yeah, look at that opacity. The opacity issue is still a problem. Even I thought it was maybe had to do with the charts, but it's even here. Let me see if can I fix it. Watch this. Let me see if I can fix it in real time. I'll do it after. We got people watch. Come on, let's keep going. Okay. And then there was just I feel like in my head there was one more. It's GCI going bankrupt. Add to CPS. That was something I was going to look into, but nothing. Let's keep going. Let's look at what moved today on the portfolio. Oh, CNR up 17%. We talked about that. Sick. This one looks good. This is a higher. It's. Oh, I told you I added a little bit. It's now the number 2 position. I didn't add much. I think I increased it. I increased it about a third of the position, which jumped it just above new gold right now. But I'm bullish on CNR. I'm still bullish even at this price. Things look good. It has some asymmetric upside, I'd say. It has downside with everything else, but it's got a strong foothold in the industry and residential real estate. We just saw all those damn macro charts crushing it. And it's I believe relatively lagging a bit, and there's a real small float though, which has bullish and excuse me, I don't want to say bearish, but it can be good and bad. What is the float? Can we check this out? Do I have Yahoo in here? Do I got to type this in? It's kind of weird. I have it all the way over here, but this is stupid that I would have to scroll over. Let's check this. I think I can do, yeah. We can go right to Yahoo Key Statistics. I got that queued up. And you go down to, what is the float? Float says 42. Shares outstanding 126. Float 42. Might be even thinner than that. I feel like it was real small. So what happens is everyone starts piling on. The stock goes because there's not enough shares to go around. But at the same time, it's hard to get institutional interest because it's hard for them to get involved with it. And maybe they just back off because they see the PE firms involved with it. But in this particular case, I think sometimes when PE firms get involved, I get turned away. I know I've said that a number of times in the stream, but this is one that it looks like they kind of pieced together the deal such that it's going to work out for their favor publicly in a big way. It could. But anyway, so when I see it, like I say, I think it's lagging. I think I'm speculating that this is part of it, that it's hard for people to get involved, but I think the upside could be quite a bit higher. I could see it, what is it, $8? Where's graphing calculator? Graphing calculator, right? Let's go. Okay. 8.5. Yeah. $25? I think it could. I mean, then you're going to have some people, if they ever look at the 20-year chart, $300. Now that's ridiculous, right? That one, right? Different bubble, different era, different company. Here we're, but you see this trend had been looking good, and then they did that huge merger. If there's anything here for a trend, if we may have some fun here, Um, $20 on that line. But I think it could go higher. I think it could get overbought, and it's partly because of that float and stuff. Is there? It's not heavily short. It can't be short. That would be dangerous. Short percent of float, 3.7%. Yeah, you can't short that, right? Okay. All right, but yeah, so I like it. I think I'm gonna say add again. So I added a little bit just because, but then I'm like I might like meaningful add to CNR. And the same thing with silly GameStop. So GameStop huge position, right? But I want to add to it, and I'm having a tough time. It's a major position, and I'm having a tough time justifying buying it at 450. I want it. I bought a lot below 4 the past month. I'm like below 4, so I'm kind of hoping it pulls back. Now at this point it doesn't. It's not a big deal. I don't care, but just because it's because of the asymmetric upside, and we've talked about relative to the other positions on the portfolio. It's hard for me to see such compelling asymmetric upside. I don't know what to say, and of course it could prove that it could turn out that I'm wrong on that, but in the meantime, I'd like to keep adding, but now I'll only do it opportunistically, right? Because this is the thing. I got a big enough position that who gives a shit, right? Who gives a shit? Can you believe this? What I noticed is it didn't close below 4 too many days. I didn't realize this till after the fact. Sorry, I'm bringing up GameStop, but because CNR is CNR in my head is in a similar camp where I might keep buying even though it keeps going up. No, GameStop's not going up. But I was looking at the adjusted close, and I bought a bunch in July, but it only closed 3 times below 4, which I saw this after the fact because I was trying to see how much volume. I don't think they're buying back shares. I'll go on record as saying that. But when we saw that huge 10 million share day, which isn't that uncommon, we had that back in June, and they had no share repurchase. I've seen a ton of volume in the past, and there was no share repurchases, so it's not really that telling of anything. It's just something I'm keeping my eye on just to see if anything's happening. But this is a nominal amount of volume. So, and there's other reasons not to be bought, blah, blah. I don't want to go down that path. But anyway, I had been looking at this and I thought, whoa, it only closed a couple times, which means I must have been buying at just the right time in those days. But now it's kind of held its own, and I'm like, nah. I actually think in the Roaring, I have exposure outside of the Roaring Kitty portfolio, but in the Roaring Kitty portfolio, I think the cost basis is below 4, which is sick, right? Because it hasn't traded below 4 all that much. I've been really lucky on that. Make no mistake. But it would have been nice if I could get it below 3. I kind of dropped the ball on this. So much was going on. We talk about so much going on March, but that first week in April there was a lot moving here too. And I'm actually not sure I bought much or anything those 3 days. I kind of forget. If I did, it wasn't meaningful. But this is the thing. So this is the thing. So GameStop's still super compelling to me right here, but it's still at these basing lows where, right? But CNR, it's on the uptrend. But this is the new value investor in me, right? In damn, that opacity is annoying. It's okay to buy on the way up as long as there's still a good amount of upside and the narrative still makes sense. I'll do it. Because that's the benefit of buying in, getting that initial purchase, those initial purchases, getting a low cost basis. If you get in cheap enough and it is a potential 5 or 10 bagger, you can average all the way up and still get 2 or 3 baggers on those ones. And I think it's a good thing to do it. Averaging down too, right? But I'd say I average more up these days than I do down. In CNR, I'd like it to just kind of chill a little bit here. Like I said, I added a little bit today. I added more yesterday too. It turned out to be good timing, but it wasn't up that much. I thought it might. When I saw it was up this morning, I said, "Oh shit, is it gonna break 10?" But then it kind of leveled off. So, a little bit lucky on the timing. But I'd like it. Maybe it'll retest down here. I'd love it below 7 again. I think I'd keep adding to that over time. Because I think $20-25 is on the cards if this whole real estate market continues to crush it. Plus, I think those insiders. You see this insider buying for CNR? Look at this shit. See what I'm talking about? They are not messing around. Starting from May last year. Look at this shit. What's the? I have it in the. We must have it in the portfolio. Oh, I only have 12 months. Where's CNR? 12-month Oh, 6-month insider buying? 2 million. 2 million. It's got to be one of the top ones in the portfolio. It's not bright green in this column here. You can see this, right? Is that my whole screen flickering? Okay. Sorry, my OBS is flickering over here too. It's kind of throwing me out. I'm making sure this, as long as the screen's not flickering on you. I feel bad if you're tuning into a damn stream and the screen's flickering all over the place. But this screen, I have another. Actually, my layout on the desk has changed since the Roaring Kitty teaser video. I kind of put that together. I'm like, all right, I just want to put this together. But since then, I've kind of built out. I got a couple of monitors here, so I can check in on the stuff. But anyway, this one's flickering today. It's okay. So CNR, yeah. So we'll see. Keep an eye. Do I have it in the buy list? Oh, I'm definitively saying add to CNR. Yeah, I think that's okay. Maybe can I do exclamation point? And that the exclamation point seems like maybe maybe if it's all capital letters or something. I don't know. Okay. What else is moving today? PBF. I might add to PBF too. Add to CNR. I added to PBF. I added to PBF last month. I'll get rid of the exclamation points. They'll confuse me because if I'm saying exclamation, even I can't. I'll joke on the stream, but if I'm joking in my notes, I'll be like, what? Why did I say exclamation point? I'll forget that I was joking. Okay, PBF. I like PBF. Same thing. Asymmetric upside a little bit. Carlos Slim. Look at the chart. Looks decent. Like it's kind of just bumbling along. I like this. I think as long as those liquidity concerns. Remember we looked at the bond prices too. The bond prices are holding up really well. And legitimate refiner assets too. So yeah, I don't know. This was, if I recall correctly, I believe Klarman owned this years ago. I don't think he does anymore. Speaking of Klarman, we talked about Klarman for VSAT, right? We'll get. Damn, I wish we got these midweek this week. The hedge fund filings. I guess we'll do it. We'll do it next Monday. We'll start. Because it would be nice to get the actual. I could try to track down their quarterly reports or something. I don't feel like it. Okay, we got time. This is another benefit of not being a day trader or something. We'll get them when we get them. I could have sworn Klarman. Toll. Yeah, Toll has them too. See what I'm saying? They know Toll's good. Toll knows their shit. Wow. They own the most. I just sorted by ownership. They own the most. I mean, it's not a big position, right? Oh, okay. What the hell did I start by? I don't know what I just sorted by. Oh, percentage of portfolio. So it's a good chunk of their reported portfolio. Yeah, I like that. I definitely knew that too. I look at if I look at everyone's filings, we're gonna look at other analysts too. We're still trying to get in the swing of things, but we're gonna look at other people's posts about companies. Carlos Slim. Anyone else? Any big holder? Nah, no one, or just Toll. Okay, but I'm pretty sure Klarman used to own this too back in the day. But yeah, I think I might add to that too. I was just kind of like taking a gander at the top holdings in the portfolio, thinking like which I might be interested in buying Pump too as far as my energy positions go. I'm just waiting on that one. I'd like it back down here, back around the $5 range. Just waiting for a market pullback. You usually get one. That's the thing. What do they say in London? You want a rainy day? Just wait a couple hours, wait a couple 20 minutes or something. I feel like that's how it is with the market too. Like I want to buy these just to, but they'll get there, and they're already good-sized positions. It's kind of like I'm just trying to put more into some of my higher quality plays. I wanted to be diversified a couple months ago, but now it's seeming less urgent, that the importance of diversification. So I've been trying to kind of push some capital into my higher conviction plays a bit, to a degree. All right, 8:30. Shit, let's keep moving. Oh, OMI, they were buying too. OMI, see this? It came back down, went back up, but they were buying. Check this. How much did they buy? Did we look that up? About almost 300K worth. Oh, excuse me. 600, 700K. Damn. Let's pop that up. I should uncheck some of these. I'm up to 25. You know what? Let me uncheck these right now. Let's clear these out. Let's clear out the day ones too. Free up some space. Oh, because I had to refresh, so this is going to have to reboot and everything. Let's clear these out. Boom. I should have done this. Maybe I should make it a habit to clear out some of these check marks beforehand. I don't have to, but in the interest of just trying to keep these spreadsheets open, I've seen the stream slow down sometimes too. Excuse me. Like I have a whole bunch of these reports, right? But I don't want to open them up at the cost of slowing down the stream. If that's what's doing, I'm still not even sure. All right, so let's just clear those out. All right, so now we're down to 12, and then let me pop back in there. All right, OMI. Did we ever look at CVGI? We should have looked at that yesterday. Oh, let's look at UFI, and let's look at GIII. I know that was in our notes while we're scrolling through. Oh, TGI got whacked. Oh, what's this? I might be willing to add to this. How does this chart look? Oh, this sucks. It's holding up okay. Damn, it was a quick near triple. Not a big position, but aerospace. It's one of those ones that had to value based on EBITDA. It gets messy. It's tough, like super leveraged. But one of my few aerospace and defense companies. Oh, that's a bummer. I don't feel like reading the news release right now, but would I add to it? Check this out. Damn, it got back up to $28. All right. Shit. Yeah, see? The stream's slowing down. Bummer. Okay. Let's see if OMI pops up here. Come on. Yes. No. That is not OMI. What's going on? No. Damn, this is a drag. Did my best to try to speed things up, but I'm still kind of hitting some bugs there, huh? I don't know. I don't even know why these tickers are showing up. Sorry about that. Let's get back to the tracker. In the meantime, I can't be sitting there looking at that. Let's just keep looking. What else was moving today? Damn, CVGI was up another 13%. Now at this point, I'll wait for a pullback. That one will sell off. That one will sell off on a down market day or something. You watch. It's just happened to me so many times. Intero. So Intero, so I got RRC and I get some calls. I think I might, if I were to pick some natural gas stock plays, I think it might be Intero. Intero. I don't even know how to pronounce it. I think because I was talking about adding to some of the stream's not frozen, is it? No, I guess I just zone out sometimes looking at the delayed stream. I was talking about adding to some of my larger position plays, and I was looking at RRC, already 2%, and it's a good chunk of those options are up there in size too. But I'm like, if it is going to be a multi-year bull market and these natural gas companies are going to survive and thrive. I feel like AR might have bigger upside. Maybe it might have bigger upside than RRC. From what I can tell, it looks like RRC is the stronger player. But as you know, this is why I'm dealing with NGD. I mean, as long as I don't think that they're going to go bankrupt. And they did. AR announced a bond exchange, right? I do want to read that. That's a news release I'll read. I saw it and I'm like, let's do that during the stream. I don't feel like it right now. And I saw it popped on that news. Let's see this. Whoa. Oh, I didn't see it. What is this one? Yeah, I think it might be Intero. I think Intero might be the play. Of course, it's already a damn 5-bagger, 6-bagger, right? And I've caught in a good chunk of that on the stock. I mean, the options, I got lucky with those ones too. But I think from here, and if you pull up book value, it's got book value like $20, $22. Who the hell knows what book value actually is? Let's check. How come it's only popping on one? Let's read this. These are important. These tender offers for its 2021. Wow, all of them. There's been a lot of tender offers. They're refinancing, right? It makes sense because interest rates are so low. If they can get if they're maturing, you kind of 2021. It's kind of them just rolling forward. Announced that his cash tender offers to purchase any and all of the. Oh, it's cash tender offers. Oh. GameStop was a bond exchange. This was a they're trying to. Oh, they're gonna try to buy it at a discount. What's this? It's a Dutch auction. Oh, remember the Dutch auction with GameStop? I say how GameStop management's have done good things. What the hell was up with that Dutch auction? Anyway, this is the first time I've read about one since then. Of course, this is bonds, not equity. Such as the Dutch auction. Are they paying at full price? What are they paying? Will be the Dutch auction cap will be a principal amount. 2022 and or 2023 notes could be purchased with a maximum purchase price excluding or equal to 500,000 less the aggregate amount paid by, but in no event more than 250. What? What? How much is outstanding on them? Check the bonds. Check the bonds. I think it listed here, right? Oh man, that opacity. Here, can I try to? Let me try. I just want to test out, see if I can fix it in real time. I think I go to webcam, and then I'm gonna try to properties, filters. Here we are. Similarity. Oh, I think I. Oh man, the stream's working real slow. I can't speak to that, but I linked the similarity. I think I cleaned that up just a touch. I'm still somewhat new to OBS. Oh, that's not bad. That's a little bit distracting. The damn monitor's still flickering. Hopefully it's not flickering on your end. I do see it's still slow. Damn. Oh, I had to. I'm working on a new GameStop video. I think I mentioned that one. It's just taking me a long ass time because I'm trying to learn Final Cut, it's been a while since I did some video editing, and so I'm trying to learn Final Cut, and so it's taking me a bit of time. But there's long-term benefits to this because, as I mentioned, the Kitty Corner, I want to roll out quick videos about all these stocks that I'm tracking. But the GameStop one I'm using as a bit of a model, and I mean it's gonna be just like with your stock education, right? What I'm gonna produce now, I'm gonna probably roll my eyes in 6 months. Hopefully, I keep getting better, right? You know what I mean? That's how you should feel too when you're trying to grow with your investment ability. Same for me, right? The research I do now, I'm gonna laugh at myself in 5 years. But anyway, but I still want to just produce this and get it out there, just so I can see how it works. But then when I start produce, I'll be able to produce other videos much more quickly. But this one's taken me a while. But as part of that, I've been trying to test out these different video editing things and seeing how they go. But anyway, I hope to have that GameStop on up soon. It's been over a week since the last one. I was trying to see if I could get it in a week, but Final Cut's just taking me a little bit longer than I thought, just because I'm trying to do some plugins and stuff, and just trying to make it a little bit cooler and funner. Like I don't want it to be such a boring research video. I feel like they can be. They can be better. But it's also tough to get it down to just a couple minutes. Plus, there's nothing new on GameStop. I mean, I rolled out those other damn videos. There's no press. There should be a press release soon on. You would think maybe they're going to hold out for earnings for all their updates. But anyway, again, GameStop's just the model. But once I get that damn GameStop one out, assuming there's no additional material updates, I'll start rolling out some of these other ones for the other top companies in the Roaring Kitty portfolio. Let's see what the outstanding. I think we're going to see the outstanding in here, right? Yeah, so wait, I don't see 2021. Are the 2021... Well, what about the 2022 and 2023? I mean, I don't really care about the specifics. Look at this. Oh, damn. How come I didn't buy more Intero? What? Sorry, I want to check these. Look at this. It didn't get that cheap. That's what I mean. Like people will say, oh, if you're trading at 80, because I remember GameStop was trading at like 80 or 70 or whatever it was, and then people say, oh, it's trading at 50, and then that it's at risk of bankruptcy. That it's a bankruptcy risk. Oh no shit. Okay, but there's tremendous opportunities when the bonds are trading out there in the equities. I mean, and so people will just kind of write it off based on that. And I'm like, what? Give me all these stocks with bonds trading at 40. I mean, if you got a Bloomberg terminal, this is probably easy to pull back, right? I don't have that shit. But that's one thing. There's like 5 things I'd like to add to my spreadsheets. One of them are the filing dates. So as soon as something new gets filed, it's less critical now, but in March I really would have liked it. Like what was just filed for a company, for one of them I'm really dialed into. I wanted to see the filing, and so I wanted to get alerted to that in the spreadsheet. I know you can get alerts elsewhere, but the other thing is bond prices. I want to see the damn bond prices, and I want to be able to sort by a whole bunch of stuff, and I don't have that in the spreadsheet right now. I think you can pay for them and stuff. Maybe I'll get to that point, but I'm not there right now. But that would certainly make my life easier on a lot of stuff. So that's something to aspire to, you know? Anyway, you see here, it's trading up like $40, March 20th. Everyone kind of threw in the towel on it. Even myself, I was a little bit skeptical, but damn, that's not that cheap. But, you know, I went more with RRC and EQT, I think, too. I'm like, oh, I don't know if Antero's going to make it. Even though their management team kind of seems to know their shit. Let me just check. Oh, sorry. I wanted to click. I just want to see the bond price real quick for the 20. Oh, it's going to be roughly the same. Oh, sorry. I want to see the 2025 one. Like, was that one in the gutter? Oh, a little bit more. See what I mean? 26. This is what I mean. 26 starts to get into my. But maybe there's a case to be made between 20 and 30 or where my best opportunities are. You know what I mean? As I see some of these bounce backs on some of these, I'm wondering. There's plenty, or rather, all stocks that have gone, just to be clear, all stocks that have gone bigger have had their bonds trade. Not all of them, but most of them have gone bigger have had their bonds trade between 20 and 30% apart. So I'm not saying, but I mean, depends on the circumstances, right? But if the low in the market, we seem to be close to it, and the bonds that you're looking at are still between 20 and 30 and not below that, maybe that's a case to buy. I don't know, just things I'm thinking out loud about. But holy shit, these bounce back, huh? Damn, look at that. I hope I'm kind of confused by this press release. So they buying? What are they buying? Dutch auction, but at what price are they buying them back? Is it within the? Maybe it says it in the. In any case, on the terms and subject to the conditions set forth in the offer to purchase. Sorry, I need some water. The Dutch auction calculate principal amount. I know that equal to 525. Oh, so were they just saying this is how much we're willing to buy? 525K of all of them? Oh, I think they are. So whatever the maximum purchase price is in those bond agreements, but up to 525,000. How come they don't group in 2021? All right. I guess. Oh, here you go. Jeez, I was gonna say, there's gotta be more to this, right? Or maybe I'm just dumb. There you go. I was looking all around. If I just kept on scrolling, huh? Come on. Any and all notes. QSIP, outstanding principal 500, total consideration bid price 980. Oh, they're trying to buy back at a discount. Yes. This is what you like to see. This is what GameStop wasn't really able to do. What did they buy back? They bought back like a chunk at like 95 on the dollar. This is good if they can pull it off. It's just what I mean. It's accretive automatically to buy those bonds back. At a discount is sick. If they, we'll have to keep our eyes on this. Oh, track the tender offer. Check to the bond tender offer. How do they have the cash? Do they have the cash for this? What do they? That's a lot of money. That's a lot of moolah, huh? I just started. Well, I didn't just start. I've been watching Sopranos. So I somehow haven't seen the full. They don't say moolah. I don't know why that made me think of that. I somehow haven't seen the full series, if you can believe that. You know what I mean? I mean, I've seen The Wire, but I haven't seen Sopranos yet. But yeah, I'm on season 2 right now. So that's a lot of money, though, right? 500, 756, 705, 14, 19. What? Do I get it open? Check it out. Circ. Okay, so this is bouncing back. Come on, fundies. Keep it together. Nice. You see what I mean? $22. Natural gas assets. They were, look at this. They were never written down. How the hell? There's weird things about the valuation of commodity assets. They value them differently. There was something I don't remember looking at natural gas. I remember looking at some of the mining companies and the way they valued, whether they needed to determine whether or not a write-off was necessary. It's like there's high hurdles to have to discount the, have to write off a portion of the assets. Like they were so high. And now I see this and I think it must be the same case with natural gas, where somehow they get away with not having to write it down. But then you look at the price of natural gas. It's just super volatile. But I remember what I was looking at was some mining assets or something. And the price had come like way down. They didn't have to write it down. I'm like, because there's so many assumptions that you can put in there. But anyway, I don't know what they're actually worth. But trading at what percentage of book value? Or is trading at 6 times? What does that mean? 1 divided by 5.6. Traded at 17% of book. As you've seen the other videos, I'm still new to the inverted the valuation metrics, right? I still think price to book, and so it's trading at 6. The book value is 6 times higher than the price. Oh, that makes sense, right? I can just do book value divided by price. You think I could do that in my head? But even if it's half that, hell, even if it's a quarter of that, you know what I mean? It's like, all right. But it gets really difficult to when you start trying to pencil through what those are worth. But still generating operating cash flow. I think we saw this, but simple free cash flow tough. But the management team, you know what I mean? There's like 3 things. If I were to make a video about Antero, it's like just the sheer size of the company, $3-4 billion in revenues. The bonds have bounced back strongly, and importantly, they're doing the tender offer right now. Like the management team they haven't bought back that many shares. I thought I saw them buy an AM. Robert Clark's not one of those, dude. It's Paul Rady. Like he hasn't been, but they own a good chunk of the company, I think. They own AM too. Weren't they buying AM? No, they were selling AM. Oh shit, that's right. But these companies are related, and and like this is a good thing. Buying back below discount, props. I hope they pull it off. This is it's no wonder I did see the stock price popped on it, but if they can do this, what do they? Do they say where they're going to pay it from? They get till August 17th. What's the date? The 12th? Right. And what the actual dollar amount they're going to pay is going to be based on the Dutch auction. So it could vary. Does it say where they... I don't know. I guess it's not that important. But anyway, those are the types of press releases I like to see. Now, that's the thing with GameStop. And added that to the list. There's a handful of things management team I don't think did do that well. And one of them, I mentioned the Dutch auction last year. What the hell were they doing? And then after they said they weren't going to do any buybacks, so weird. And then, but they should have refinanced. They should have refinanced a long time ago. They waited until, I'm sure COVID impacted it. Maybe they were closer beforehand, you know. But as it turned out, they didn't end up refinancing until June. It's like, couldn't you have done this 6 months ago? What were you doing 6 months ago? And then I don't know. Well, it wouldn't have. They wouldn't. I say that, but they wouldn't have been able to do it at a discount back then because the bonds were still trading apart. It wasn't until March and April that it started to sell off. So I guess that's not totally fair. Oh, and the price is still kind of staying right there. Any action on these, by the way? Nah, not much. Pretty quiet. Okay. All right, but AR, yeah, I like this. I mean, I can't see much here. I can't see much in the fundamentals. I don't know. What do you see? It's more about the story behind the company, I think, more than the fundamentals here. Sometimes that's more important. But you see the cash flow? Trading at you're getting $2, $3, $4 in cash flow per the price. Obviously it's free cash flow that matters. Don't get me wrong. And they haven't been growing. That's the thing. You're throwing off if you have negative free cash flow. It's like, well, you better be growing. And how are you financing it and stuff? I think it's been. Let's take a look at the debt. This is ugly. And this thing's in the way. I should have cleaned these. Maybe I still will. You're gonna hear me complain every time. Here's total debt. Oh, you can see it. Total debt right here. So there you go. There's how they've been financing this. 3.4, 4.5, 6.5. But now it dropped down.
dropped down past 12 months, but it's still a lot of debt relative to when you have more debt than revenues. That's a leveraged company, and that's why it's trading in the gutter. I just broke it. Did I break it? Hopefully it bounces back. All right. I want to get to daily. Oh, did we pull up those? Oh, did that just break on me? Can I pull up the other ones? What about OMI? Because I'm thinking about, would I add to OMI? It's not going to look that cheap. Come on, bounce back. It'll come. Oh, this too. I wanted to look at TGI. All right. Oh, GII. There we go. Okay. Anything else? Western Digital. Oh. Is it still falling down? Bumbling along. Hanging in there. Hanging in there. Let it keep dropping. Oh, I'll go heavy. Well, how big is it in the... I'll go heavy. 0.62. Watch WDC at 36. Let's keep our eye on that. That's one that I would... Yeah, I'm just watching it. I'm not saying I'm not taking any action or anything, but I'd like to. I could see myself getting that to 1% pretty quick, percent of the portfolio, and then take it from there. You know what I mean? Like, don't just wait. I don't want to go in. I try not to go in too quick. I kind of just want to get something in the portfolio and then just like, all right, let's see what it does. Let's see what happens fundamentally, technically, market wide, and just keep an eye on it. But sorry, that just stuck out to me. Every time I see Western Digital sub 40, I'm like, what's going on? CPS, we were looking at that. See how much time we spend in the damn current portfolio? This is a benefit of having so many companies in the portfolio. It is. I like it. I do like it. I've never had this many in the portfolio, but like it's like every day. It's like a screening opportunity. And then you see something new. Like, there's so much damn data in here. I can't see all this shit all the time. But I see something new, it catches my attention. Gannett, DXC. Oh, yeah, I was kind of looking at DXC. I know we were talking about this. Looks okay. Remember I said I was holding back, but, oh, you know what? Let's see if what Einhorn did with it. If he, when that comes out. I know he already wrote his, thing, because we talked about tech, because I had seen that he bought tech, which was sick. Einhorn. See what he did with it. He may have done something. Oh, let's see. What did he do last quarter? Because I think he bought it a while back. I think he bought it before me. I think that was one. Did he? You know who else I think owned it? Was Toll, I think, may have owned it. Let's see. Oh, I don't see. Oh, right. Oh, I don't see any of them. So quarter end was March. No, quarter end was June 30th. So much happened that for all these funds, they probably just. It's hard to. This was a leveraged company too. They were probably just like, forget this company. Everything else is so cheap. You know, you don't have to own. There were different ways to play risk that if they did sell out, it's less meaningful than if it was just a stable market quarter. You know what I mean? You feel me? But if I do change in shares, hey, Maverick, they're the ones in GameStop, aren't they? Is that the same company? Does anyone know Maverick Capital, by the way? No? Okay, so they weren't heavy. Oh, Greenlight was a heavy seller. Oh, they sold out. So there you go. They sold out. I think I kind of remembered that. But I had trimmed DXC before then, too. So that's what I mean. If I did it, they kind of in the ssame boat. Super leveraged player, other attractive things. You know what I mean? It's the opportunity set. What else is out there? And I was surprised. DXC fell pretty quick on me. Not really. I actually got in. I got in around 20, and then it collapsed on me, and then I got halved again. I'm like, oh, but everything was falling. But then I was surprised it didn't get cheaper. Here you go. Hit the support. Confirmation buy. See that? Then I'm like, oh, it's so levered. Can it go under? Oh, it did go under 10. It went under 10 that first week. Is this monthly? Oh, this is monthly. This is monthly. Okay. Oh, I forgot it went under 10. Oh, that's cheap. It's only doubled since then. You know what I mean? Like it didn't get that cheap. I'm like, yeah, forget this. And that's still in the portfolio, but I replaced it with other stuff. But now, and this trend doesn't look that good. Did I say I did? 900 DXT. We just answered that. That was good. Okay. Anything else here? Tenico. Looking good. And what I can do too, remember what I can do? I can click this. Watch this. I'm not gonna do it now, but maybe this is a quicker. Damn, maybe we can do that on Friday. I pull up this, and oh, it's not updated, so I have to update this. Does that work? Can you spare me 60 seconds? If I do, the portfolio is not even totally up to date, but if I got CNR on there twice. But if I do this, watch this. RK portfolio. And then I go file. Download CSV. Isn't there an export? Is it download? Okay. Download CSV. Then I go to this button here. Can I do this under? Oh, then I have to clear out. I made this mistake in one of my videos or the stream or something. Delete list. Oh, I just deleted a whole list. Oh, what was it called? Arcade Portal. I clicked the wrong button. No! What was it called? Roaring Kitty portfolio? Roaring Kitty Weekly or something? Roaring Kitty. Oh, Roaring. It was just called Roaring. So I'll just create a new one. Oh, are you kidding me? I clicked the wrong button. That's okay. I should be able to fix it real quick, right? Then boom. Then I just go to upload CSV. Then I go bam, drop this, upload. See, it's not that. So I've been thinking it would be real shitty if I did this during the stream, but that doesn't take that long. If I don't mess up, I was supposed to click delete down at the bottom. I think I got to click delete down here. Let me see. Yeah, it's kind of annoying though. I got to scroll down on the way to the bottom. Give me a break. But let me bookmark this. Now I just messed up the damn link. But that was easy to fix. That was cool. Okay, that didn't take too long. That's good. I'll try to do it before the stream. But in a pinch, that wasn't bad. Then do 10 per page. So I can do this. We could do this. So this is one I can export it by weekly and into the other chart list. But it looks like this is 1 year daily. And then we can scroll through. Oh, look at these old charts. So I created these before I kind of cleaned up the charts a little bit. Kind of annoying. Oof. Oh, I can't fix those right now. These charts look a little bit different than the other ones. I tried to clean them up a bit because I felt they were kind of cluttered. Sometimes I look at the moving average and stuff. Not always. It's kind of helpful here, actually. Because usually I'm just trying to get the trend. I'm not trying to get those small moves. Anyway, we can go through and then click through the list. I'm not going to do it today, but this is something I want to do because I feel like this would expedite. Instead of having to click open each chart, let's just go through the list like we did today with the indices and commodities and stuff. It's like a faster way to get your finger on the pulse of stuff. Yeah. Okay, cool. 9 o'clock. Damn. We need like a 10-hour stream. You know what I mean? All right, let's clear all this out. And I'm all done looking at the Roaring Kitty. Let's just quickly look at some of the fundamentals on these things. And then what I want to do is I want to go look at insider buying and the daily movers stuff. OMI. Here's OMI. Look at this. 8 billion, 9 billion. I mean, you see it declining, right? Fair point. But still sizable, huh? 9 billion, 8 billion in revenue? Jeez. And then on price to sales or sales to price, trading at 8 times that. So what's that? 12% of sales? I got to get used to it. 8 times. It has revenues 8 times the price. Or price trades at 1/8 the revenues. Damn. Okay, negative tangible book though. That sticks out, right? This is what I mean. Levered player. Ooh, it declined though. Why did net common overhang decline so much? Did they pay off debt? Oh. Sorry about that. I'm trying to get total debt. You see total debt? Yeah, they paid off a little bit. Went from 1.7 to 1.4. A little bit less than. the revenues of 8 billion, right, versus 1.4 billion. We're looking at AR. You see debt of about 1 times revenues. That's a little bit more precarious, right? Because like what they're hoping is they're going to make way more revenues as natural gas prices go up or profitability goes up and so forth. Here, let me X out of this and give us more space. This one's tough to value. It's tough. But historically, look at historical earnings. This is the thing. Trades at, what's it trade now? $16. I got max earnings of $1 or $2. It's not that cheap anymore. Maybe they've cleaned up there. It was historically pretty well run, and it wasn't that levered. You know what I mean? What were the margins? Thin margins, though. Here you go. Look at this. 1%. Oh, 1%. Don't trip. Don't trip. And then he did. 0%, minus -1, negative. I know these are averages, but you can't mess around with those thin margin businesses. And then you mess around with some debt. Forget about it. I think they did. No, it wasn't an acquisition. Was it an acquisition? Oh, it was. It was an acquisition. I thought I saw. Yeah, it always happens with those damn acquisitions. But I don't understand. They made an acquisition. Revenues go down. What the hell was the acquisition for? I don't know. I mean, it's not all about revenues. It's about profits. But profits went down. What the hell did they do? I don't care. Okay, so EBITDA, it comes in handy here. You know what? I'll lean on EBITDA. Everyone shits on EBITDA, myself included, but I'll use it. Sometimes I have to. Nothing else to go off of, and I want something to go off of. Other people just say, yeah, forget about it, but I'm like, come on, it could be something there. If you got some other characteristics, like say some insiders buying or something, right? I know I say this over and over again, broken record, but you get some insider buying or some fund took a position or activist or what's something else? That's usually mostly it. Something else? I'm trying to think of other catalysts. I mean, the whole market's selling off. That's not really a catalyst. And then get your attention. And then I'll just use EBITDA. I'm like, well, there's enough of these other characteristics that I like. Then I'm like, yeah, I'll deal in this. Let me just use EBITDA to get a rough, very low confidence valuation, but just to put something in the damn spreadsheet, you know? Something in my head. But still generating positive operating cash flow. You see that? It's important. Oh, I thought I moved this. Oh, sorry. There we go. There we go. I think I've been leaning. I think I've been moving this way. I gotta get used to this streaming shit, huh? Okay. What I was gonna point out, operating cash flow right here. Still positive. I like to see that. I mean, ton of debt and all that shit. But and then even some positive simple free cash flow, not bad. This bump up kind of seems like just a lumpy. Excuse me. Well, that's not bad. $1, and it's levered too. Did I already correct it already corrected the share count. So you see this? I see 64 million in shares, but it got classified as levered. And then this calculator said, well, issue some shares to get it. So what is this, 2? So it's saying to get the net common overhang as a percentage of assets down to 30%, and issue enough shares, blah, 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 109 shares. So these averages over here that you see, these are using these shares adjusted. And so this simple free cash flow figure here, this is the unadjusted share. This is when you just see a 1 year, this first row. Hold on. I'll scroll up. I should just scroll up for you too. But I like to see revenues at the top. That's why. But sorry. If I click simple free cash flow there, it's this column right there. That's using current share count. But this one is using the adjusted share count. And even the adjusted share count, which is just kind of normalized the balance sheet a little bit. $1 in simple free cash flow. That ain't bad. That ain't bad. Oh, you know why? Because the share price has risen quite a bit. See what I mean? It's a good thing to have your share price rise. So I know, I'm just shooting shit now, but like people were shitting on Hesta and Permit for wanting GameStop to have a stock price. Hopefully everyone saw the presentation and now they're legitimately invested alongside everyone else. They want the company to do better, blah, and there are people trying to say they're trying to short squeeze the company and all this stuff. Like, no one in that company has been invested in GameStop longer than them. Not the management team, no one else. But they're not even necessarily trying to do a short squeeze. I don't even remember them mentioning anything about the short interest or anything like that. That was Barry who said that. It's not so much the short squeeze per se. I don't think if someone has mentioned the short squeeze, I know Hesta and Perman pointed out the short interest, but no one's talked about trying to trigger a short squeeze. It's kind of extreme, but it's more just increasing value per share, buying back shares to increase value per share. And with such a high short interest, it kind of facilitates things because it increases the liquidity. But what I'm just trying to get at is that even if they were trying to do things to try to get the share price higher, you can't just hear that and critique them right off the bat, because it can be beneficial. The business can benefit because of a higher share price. It's not like the investors get in there, the stock price will rise, and then they sell out, and then they're on their way. And then you go, oh, those jerks, those investors. The company can benefit because it has a higher share price for a number of reasons. For example, share price goes up, it gets positive interest. People are talking more positively about GameStop. In theory, the company can issue more shares. Let's say it was in a precarious financial position, but for some reason the stock price rose, and not just a short squeeze. Because if it's a short squeeze, the stock price is coming right back down, and it's not going to last that long. And maybe that's what some people are saying. Hester and Permanent were trying to do, but Hester and Permanent had been involved well before the short interest was out of hand. But so I don't think that the plan is to sell out quickly, because how can you can't bet on something like that. It's unlikely. Anyway, if the price were to rise and stick around as it goes higher and higher, there's more positive interest, and there's more institutional interest, and you can issue shares and in theory raise more capital and use that additional capital to grow the business even further, to improve morale and everything. Like, there's so much you can do with that increased capital, but you need a higher stock price to do that. And so that's what I mean. It's kind of reflexive. The price goes up, and the business value goes up, perceptions go up, and you can do more with the increased capital. So there's a lot of benefits to a higher share price besides just investors trying to get a quick win. Anyway, get off my soapbox for a little bit here, but so I say that in OMI's case, it used to be, if we did this a couple months ago when OMI stock price was in the gutter, the shares would have been there would have been way more adjusted share count, because to get it down to this figure, you would have need to issue way more shares, and these figures would look way worse. But because the price has risen, if they were to issue equity at this point, then they could get more capital for it. And anyway, my point I don't even remember what my point is, but my point is now the numbers are starting to look good because the price is rising. If the calculator is just a quick tool, that's all. But still super leveraged. And I remember, there was, I mentioned this, but I think Jeremy Bloom on Seeking Alpha, he was long OMI, and he had some good rationale behind it. I forget it off the top of my head. I could pull it up, but $16 looks kind of steep for what I'm seeing. I don't know what that acquisition was, but if it's transformational, maybe. But I just see historical earnings, I think $1 or $2. Market cap $1 billion. Okay, let's look at the chart. Oh, can I just try to get a valuation based on the numbers alone? If I were to get a valuation on the numbers alone before we pull up the chart, I know it's at $16, but I forget the historical price action. I see the thin margins. That sucks. It doesn't suck. I see this. I think it could be an opportunity. How about operating cash flow margin? 1%, 2%, but positive. Revenues are on the decline. You might have to think that that's a huge decline though. 9 to 8. What the hell was that acquisition? Is it that bad of an acquisition? Shit. So, I don't know. How do you justify more? Then you got the whole damn debt. The debt. I'm going to pull up the bonds here in just a second, but I really don't know. This one's tough. What about EBITDA? EBITDA adjusted? It's negative right now. Better off using cash flow just as how do you get more than $20-$30? In $20-$30, there's a lot of risk. It was historically well run. I'd like to see this. You see this purple and green? Boy, this purple and green's turned out to be really helpful for me for just a quick take on a company in these areas. Remember book measured ROE? There's the definition. At least it had been well run. So I do like to see that. That sticks out to me. And look at the historical equity growth up to that point. All right, so there's something. Look at this. Went from $1 to $10. Went from $2 to $10 from 2000 over a 10-year period. Shit. What do they do again? I know it's healthcare, and they do anything specific. It's portfolio, medical and surgical supplies. Yeah. Anything beyond that? All right, that's all I know. That's what I mean. Not a bad industry. I like that type of a business description. and had been well run. They messed up. That's as we always say, that's fine, no big deal. Whoever messed up, maybe the management team changed, maybe someone else screwed up with this acquisition or whatever the hell happened. Plus, it's thin margins. When that happens, and you falter, look out, because that would explain the price action, because you can't afford to have losses, substantial losses anyway. So the question is, could they correct things? And I do remember, I before I were to pull the trigger, before I were to do anything, I'd pull up German Bloom. I kind of forget what he was saying off. He was bullish, but the price has gone up quite a bit. Anyway, it's hard for me to justify more than $20-$30 looking at this. I don't. Even this looking at an operating cash flow, even historical operating cash flow, you're looking at $1 or $2. That's not even free cash flow, right? I can't see it. So $20-$30. Did the stock price ever trade much higher than that? Hey, not bad. Not bad. It's at the higher end, but because now it's way more levered than it was back then, right? So that I would attribute my lower $20 price to that, the increased risks involved. You know what I mean? Whereas back then, 2015, 2016, you can see $20. You know what I mean? You can see $30 here. You know what I mean? This is that can be beneficial. So block this out. Block these out. Okay. This is good practice too if you're looking to try to fine tune your valuation, and then look at this and then try to value the company. Then I've done this before, and maybe I should have done it right here and be like, all right, let's see what we see. I love what I see right here. I see growing revenue. It looks terrific, huh? This is what I mean. So this is a good sign. This is a well-run business. Thin margins concerning, but just something to be aware of. It increases the risks a bit. And then, but what about return on invested capital? Pretty solid return on invested capital, 14, 15. These numbers are kind of messy. I don't always lean on them, but then I use a cash flow EBIT. This is operating cash flow plus taxes plus interest minus depreciation. It's a kind of a weird way to calculate. Sometimes because earnings are kind of screwy, so I try to use like if you do regular EBIT or regular EBITDA gets messed up because of goodwill write-downs and shit. So I sometimes try to use operating cash flow, try to mess around things. Sometimes you just want a number, you know what I mean? Just give me a number to go off of. And this is as a percentage of tangible operating assets. So kind of an assessment of the quality of the business. And these aren't bad. These are like pretty damn good, you know? And then you see not that leverage. So this was easy to justify. And then you see the earnings growth and everything. I actually might have thought it was worth more than $30. I would have said, let me see, this strong equity growth, it looks really good to me. What would I have said? And then this is screwed up because of the share count, but really it wasn't levered back then. So it would have been $1.15. And $1.15 times what? Excuse me, $1.50 roughly. Well, you might use 5 years. This is the thing. It's a less cyclical industry too. So we'd say the average of that is 176. Share count was pretty stable. What would I say? So I'd say 1.76 roughly. Thin margins, you might say 20? 20 times? 20 times that? I might say 20 times that. $35? I might have said upwards of 34, which now I've seen the historical price, but that's not the point. I can justify this with the numbers. What about even further than that? Damn, that trend looked good too. This does look kind of good. Shit. They messed up. They messed up or something. Shit. Should I have gone heavier into this? There was no insider buying back in the day. Damn. Oh shit. Oh shit. That's a good amount of insider buying. Who is this? It's the same person. No, it's not all the same person. They just bought more. Damn, the opportunity's missed though. This isn't like the other ones where I might still I don't like it at 16. I don't. Damn. How come I've like owned it? It's in the portfolio. It's in the portfolio and everything, but boy, this was kind of useful doing that. Maybe I should do this more often, kind of looking at right here. And then obviously you see the stock price, and then you see what created this reaction. Now it's a question of, and then I wanted to check the bonds, right? If they're even publicly traded, who knows? Oh no. How low did it get? Damn it. Missed opportunity. Add it to the list. Oh, this was 2019. So I've been looking at it for 18 months. And look at the bonds. They never got as low as they did back then. It's no surprise that the bonds, it's a little bit of a surprise they held up that well. But if you got a high quality cash flow stream, even if it's low margin, and now they're almost 100. Oh, bummer. I'm gonna add it. This one's confusing. What the hell? I don't know what to say. What was it doing in March? This is another one of those just super leveraged, and I was like, oh, you know what? It didn't get that. That's what it was. It didn't get that cheap. It's only a triple. I was hoping it would get down this low, although this is kind of bullish, right? I mean, it's kind of bullish. It didn't get oversold. This is a weekly. Maybe if I would have been looking at daily, maybe. Look at that. I do remember it never got cheap enough. I'm not saying I would have gotten heavy because I wouldn't have, and maybe that was a mistake. Look, it never got oversold. March 12th. It bottomed on March 12th. And then look at this. And then by the time I was starting to get, it was that week, right? March 16th. And then it goes boom, boom, boom. March 18th. It was up on March 18th. What the F? All right, so this explains it. You know what I mean? So I said I was confused. I'm confused because I was looking at all this stuff. You have to take my word for it. And let's zoom in a little bit. There you go. So because I was a little bit slow because I thought I had more time, and went boom, big sell off below 4, which still wasn't as cheap as last time, which is fine. You don't always have to hit that low bottom, but it's bullish if it doesn't. And then it was March 13th, and then it went boom 16th, and then that was that Monday. We were like, what the hell's going on? The miners sold off. Then 17th, and then 18th. It went up 4 days in a row, right when everything was cratering. Short squeeze? Maybe a short squeeze of sorts? Did it have a heavy short? What's the short interest? Or people closing their position. If they had a high short interest, did they have one back in the day? There you go. All right, so right now it's 19%. I would wager that it was higher even back then. Granted, this you could say, oh, the stock price rose, maybe more people shorting it. I don't think so. I bet that was a little bit of a short squeeze from people closing their position, and maybe shorting other stuff. Wow, maybe. What do you think? I'm no expert in that type of stuff, but if I had to guess, this looks really unusual. I don't think you're gonna find too many stocks that did this week. Boom, 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 boom. Up every day, 5 days. One? No. Oh, Friday. And then it was down, and then it came, and then it was down, but right to where it closed. And then it quieted down. So there was still this opportunity. But that's the thing, $5 was never that cheap to me. I never thought it was that cheap because, like I just said, I couldn't see $20, $30, and everything else was so cheap that I didn't like the risk. And so, okay, I'm not. It's a missed opportunity, but I feel less bad about it. I was a little bit slow because I had to catch up. And then it was up, and then at $5, $6. It was at $6 that the 18th and the 19th. All right, just trying to sleep at night. You know what I mean? I gotta convince myself. half these damn notes are missed up. Shit. Okay, but that was funny because I thought it looked interesting to me, and it was weird that I didn't have a heavier position, and that kind of explains it. Sometimes I need to just look in a little bit deeper. Okay, I'm all over the place here. I'm going to look at CVGI. I wanted to look at Maverick Capital. They're the ones who went into GameStop? No? Shit. Is that not them? Oh, they got a ton. Oh, it's not even a top position? Oh, shit. Wait a second. Is it Maverick Capital? I'm actually not sure. Oh, shit, it is. Oh, that matters less. 0.28% of the company. I gotta put. All right, who cares? And I'm not gonna even Google their name. I don't care anymore. If it was a large percentage of their portfolio, if you got 500 positions, the hell do I care? Okay, let's just look at a couple other the CVGI. We got to get to the date. We got 10 minutes to do this. It's 9:20. We got 10 minutes to get through Nope, wrong one. CVGI. Let's go. Let's go. All right, so pretty stable, somewhat stable revenues. Look at this return on invested capital. This may stand out to me. It's look at this. In cash flow, EBIT to tangible operating, like these are decent returns. Look at this. 6%, 5%, 13%, 12%. What the hell? These are average 3-year averages. Wow. Better than I remembered. I mean, revenue's down year over year. It's fine. Cyclical industries. See, I like to see that. You know what I mean? And it's like, all right, when I see that, I'm more compelled to add it to my watch list if it's not there. All right, tangible book value, real low tangible book value. Dividend. Shit. Did we ever figure out the dividend issue? Is there a dividend here? Yeah, what's going on there? I know I made a note to go look into that, and I never did it. I don't think they never paid a damn dividend. No way. Okay. All right, EBITDA. Look at EBITDA. See this? $2, $1, $2, $2. Trading at one time, 2 times EBITDA. You know what I mean? That's cheap. GameStop trading at I suspect it will be trading below 1 times EBITDA. I know we know all the reasons and stuff, but that's GameStop's just front of mind because I've been looking at the numbers a lot lately. But then you see this, like that's cheap. No matter what else is going on, you're looking at a company trading at I'm just saying there's still debt to consider. Blah blah blah. But 1 times EBITDA, cheap, automatically on the list. And then I'm just trying to figure out what is the hair on this? Like, why is it so hairy? What do I got to be concerned about? And then I'll look and be like, that's not that concerning. That's not that concerning. That's not that concerning. That's a buy. That's how that works. You know what I mean? So show me something that's super cheap, and why it's cheap, or like what's cheap about it, and then I just need to investigate, and that's what I'll do. But yeah, not cheap on a price to book basis, which I don't love for a company like this, an industrial like this. I usually like to see a pretty high quality book, but pretty damn well run, and that's partly because it's so levered. But again, this is a total tangible operating assets. This is including the debt. Damn, that's pretty damn good. All right. The book measured ROE, you see the purple and green, but it's kind of skewed because of revenue stay flat because that's good. It's kind of skewed because of that really small tangible book. You know what I mean? It kind of skews the numbers. These are ridiculous numbers. Toss them out. But net common overhang. But even adjusted, look, even if you adjust, it's not that levered. Even if you adjusted, the share count only gets to 46. And then you also notice it raises these are the adjusted. This is the adjusted net common overhang per share. This is the adjusted book and tangible book per share and so forth. And then it's at $3 versus, what is it, $4 in the share price now, just for what that's worth. But look at this, operating cash flow, $1.50, $1.50, $2. And then simple free cash flow, $1. Okay, this is looking better. All right, so it's got 5 times revenue. So what's that? 20%. Price to sales 20%. 18% roughly. Messy though. See the simple free cash, couple of years of losses. Not that it's not a robust free cash flow. It's not like it's super stable or anything like that. But jeez, what do you think? I kind of know the history of this stock price, so I'm not gonna bullshit you. But even looking at the fundamentals, I still think that the historical chart price is kind of in line with what I'm seeing here. You know what I mean? I think I kind of see $10. I do see the 8 to 10. In the past, I've thought like 10, 12 to 15. I don't see 15. I don't think it's traded that high. In my mind, I'm thinking 10. And why am I seeing that? I'm just like taking a multiple. So that's the thing. I know discounted cash flow analysis, blah, blah, blah. Just give me a rough ballpark of what free cash flow is, preferably. or EBITDA, and then I'll use an appropriate use a discount rate that's appropriate for the situation. So if EBITDA, I'm going to use a lower multiple, right? Of course. If it's free cash flow, then whatever multiple I'm going to apply, it's going to be based on the risk that I perceive looking at the historical financials. There's other risks too, of course, right? I'm like, if you're in oil and gas, you have the risks of oil and gas being replaced by a substitute. But the risks I see here are just volatile revenues. I see gross margin increasing. You know what I mean? Like, but decreasing over a 15-year period, or a 20-year period rather. So okay, but still somewhat stable, not collapsing. I see volatile margins here, but thin overcrowd, like never above 3% on any 3-year average. Yikes, it's not that thick. But that's kind of the nature of these businesses. You don't see much higher than 5-6%. Tangible book kind of low. It's a little bit of a risk for me. I kind of like tangible book for these companies. So these are real risks. I'm not going to do 20 like I did for OMI in those golden years, right? And then earnings kind of choppy. Earnings a loss this year. And then a couple years, it's like not stable free cash flow. Like if we were using a buck on EBITDA, you can't. That's what I mean. You'd be looking at like 5 to 10 times. Like you can't get higher than 10 times that. You know what I mean? I'm not kind of stuck at 10. And simple free cash flow, even if you're at a buck, I couldn't do. It's too risky to say 50. You can't do 15 times that. You do 10 times that. You know what? I'm seeing like 8 to 12. I'm seeing 8 to 12. And let's. Jeez, it's right in there. I didn't remember it. Oh my. It's exactly what the historical chart price is. All right, I can't. Maybe it's singed in my brain or something. I don't remember, but it looks like it's exactly how it's actually traded. So I agree with the chart, and I think the chart has done a great job of reflecting the risks on this downturn here and on the uptrend. It kind of topped out at 8 to 12. That's what I mean. It's not that cheap right now, but at $12, if it's a cyclical turn and like small caps are coming in favor, it'll probably hit 12 again. I'd like it better at 3 though. I think I'd add it on a pullback. I kind of like the positioning here. Is it a note? Wait for pullback. I don't think there's a significant upside. I need to see some real asymmetry there, and I don't see it. UFI? Oh, we're not going to make 930, are we? Come on. Ooh. Oh, what the hell was that? Okay. Okay, so here's UFI. Remember we talked about textiles, sells recycled and synthetic products made from polyester and nylon. I think its customers are people who make apparel, oriented, textured. Look at gross margin. Boom. Look at this. Increasing. Revenues, boring revenues, stable. I like that. I mean, I don't love it. I'd like growing revenues, right? But it's like the type of company that I'd say. Okay. And then look at this, like CVGI. Remember those high? There's some decent numbers up here too. Like this is just kind of some like the quality of the operations. You know what I mean? Like cash flow to EBIT, return on invested. Oh, here's the definition of return on invested capital. I don't know if I showed that before. This is my definition. There's a whole bunch of ways, and you can't worry about the precision. Some people are like, oh, what was this? Return on equity 12% or return on capital 16%, 16.2%. It's like, who gives a shit? I don't care. Is it good? Yeah, that looks good enough. Does it stand out to me? I'm looking for stuff that stands out. I don't care about the specifics, in case you couldn't tell. But gross margin, and these are decent. It's not bad. It was bad around here, huh? Well, that was partly because of what's their input? Cotton, made from polyester. Now, do they have? Because commodity prices were booming in those 2000s. What was cotton doing? No, it was okay. Yeah, it didn't say. It said made from polyester and nylon. I don't know. For some reason, I do remember this skyrocket. Boy, it hasn't done much. It's been kind of flat. Get back on it. Let's go. Okay. Tangible book 18. Look at this. It's pretty. See, purple and green, purple green, black and yellow. Okay. Like kind of like stable growth, not too leveraged. See this? Like tangible book to net common overhang $7. Like, come on, that's dang shit. So not levered at all. Safe. Well, we don't see too many green safes here, huh? Circ. So that got my attention. Usually there's not adequate opportunity here for me, but for some reason there was. And then look at actual earnings. Shitty period here for the company, but then they turned it around. They're on $1.50, $2, like some solid earnings. Now a loss, but at least at some point they were earning $2 per share over a 3-year period. That ain't bad. Operating cash flow ended simple free cash flow not quite as high as earnings, So I think in this case, tangible book is a pretty decent gauge for value. I think from what I'm seeing, earnings. This is pretty solid earnings growth, but the simple free it's not mirrored in the simple. Let me scroll down. It's not mirrored in the simpler free cash flow area right here. This is quite a bit lower. And again, if you're really doing free cash flow analysis, you'd pick apart the cash flow statement. We just don't have that luxury. We don't have time to do that. And so I just think, all right, so earnings not quite that high maybe, and net cash flow is about the same. And sometimes you have some big up years, but mostly $1 or $2. And someone was getting involved in this too. Is there any insider? Oh, there's some insider buying. 6.6 million. Is that the fund? That's a fund, I think. It's a value. Is it Value Act? Oh, Kenneth Linga. Who the hell is that? Do I know him? That name sounds familiar. It's him. That's a fund, ain't it? This guy helped the founders of Home Depot. Wow. Does he run a fund? No. Seriously? He co-founded Home Depot? Jeez. Oh, here's the 13D that I saw. Bought it himself? What? Okay, so as of February, he owned 8% of the company. Invamed Associates, but I don't know them. All right, whatever. It doesn't matter. He was the one leading, and he bought a shit ton of it. So it's his name, but I could have sworn someone else was. Oh yeah, it was Value Act. I said that. That was last year though. Oh, okay. So they still own. They went above 5%. Look, yeah, okay. I remember they were buying at 20. I remember that. It's kind of stuck in my head. 20. Buying at 20 for 2 million, 3 million, another 2 million in August. In September, nominal, and then so a ton of insider buying, all at prices well above this one. You know what I mean? So 2025. So they were buying at those prices. You know what I mean? They're probably not idiots. They could be, but that much buying. Value Act, that's a legitimate firm too. I don't have much overlap with them, but they're activists of sorts. Though these must be Yeah, and then I don't know Kenneth Langone. I don't know. But I like to see that. So then I see tangible book of $18-20. So I see what I'm seeing here is like I see for my conservative investments $20 to $30 with an option for more based on that insider buying at around $20-24. Maybe they were expecting a transformational thing or something like that. They didn't sell out. Value Act, it looks like. Now what's the that's what I see. I see I think book value is a decent proxy. I bet they can. I mean, maybe they don't return to profitability, but they might. But and then you say if they do, then two times. What'd you do it by? $15? I could see $15 times 15. I could see the market giving a 15 multiple. I see like low 20s to low 30s, maybe 40 based on that buying. But I'd be. Let's see. Oh. All right, look at that. So it traded high 30s. I would have said this. See again, it's roughly in line with what the chart did. That's why I think there's something there. I said low 20s to low 30s. Yeah, I think value's in this range. I think the book value, it's a good enough historical performance that book value is a decent proxy for fair value. And I do see real free cash flows, real earnings, not necessarily super robust or anything like that, but definitely a buy below 8, right? And below 9. Not as compelling at 13, I got to say, though. Oh, there's a big... Oh, would it get bid up? Oh, we just missed it. Not that much, right? But it's more compelling at 11 than 13. Okay, UFI, wait for a pullback. All right, I'm glad we looked at that because in my head I was thinking, wait for a pullback to 10. I don't know. It's just that 13. I don't know. But there's the thing. There's minimal downside. You know what I mean? So this is the thing. Upside. This is kind of like for a number of companies. It's just not that levered. It's so it could be a good place to park capital. You know what I mean? Prefer to wait for a pullback. You know what I mean? Not levered. It's not bad. That's kind of why it was in my head. It's like, all right, I'll just put some cash in there, and then if it works out, great. On the upside, if I get a double, okay. But the downside's somewhat limited by the assets and by the minimal leverage, by the insider buying. Maybe it is a damn buy. I know I just wrote that note. Maybe it's, well, how big is the position? All right, see what I mean? 0.8%. So you can see this is why it's that. Why it's that level. It could be 1%. Alcoa, crushing it. I think I might wait on a pullback. Like a 13 seems a little bit rich. Maybe back down to 12 or something like that. I know we're talking about pennies here, but we got enough positions. Okay. And GIII, real quick. I won't do TGI. We got to keep moving. All right, so leverage kicked off. We don't have an updated. Hey, what was the revenue news on that? Was about 600, 700 million. Oh, this is a much bigger company. Look at all the purple, huh? Jeez, paying a dividend? No, just solid, incredible equity growth. What? The hell is that? Wow, huh? Look at that. Look at that earnings. You know what I mean? Didn't this trade below? Look at this traded. Oh, before we look. Look at, I mean, these numbers look better. You know what I mean? If I recall, it traded below like $4, something obscene, and this looks really good. This looks more compelling. Oh, why is it trading so cheaply? So tangible book value isn't that high. It's got some book value that it could be written off. It's a bit levered. Oh, it says safe because of strong operating cash flow. Nice. We don't have the updated. This is through April 30th though. But positive operating cash flow. What's earnings? $152. Wow. It's probably gonna be design sources in markets, women's and men's apparel. The operates into wholesale operations and retail. Its products include outerwear, dresses. Huh. I kind of want to read more specifically what it is. Sometimes I'll pull up the actual 10K just to see how they define the company. You know what I mean? All right, so same opening definition, but like, what is it? It's a portfolio of more than 30 licensed and proprietary brands. DKNY, Calvin Klein, Tommy Hilfiger. We are not licensees. We are not only licensees, but also brand owners, and we distribute through multiple brick and mortar online channels. Okay. Our own proprietary brand. Oh, they own DKNY. A lot of licensed brands. All right, so they're just selling. So a lot of people didn't expect this demand to come back. But isn't the consumer? Didn't we start this stream by looking at all those charts and the consumer's looking solid, at least on the charts? Huh. I think this guy might have been buying some too. He had bought a shit ton back in the day. He's the CEO and 10% owner, but he hasn't bought since April. But look at this. He bought a shit ton at 25, 26. That was on my radar. I remembered him doing that. That's a big reason that it was as big of a position as it was. Oh, I kind of like this. Oh, I like this more than the other one, UFI. Shit. I can't believe it traded so cheaply. Oh, that's not it. I always do that. Oh, we're at 9:40. Oh, we're going to get to the daily movers. You believe it traded? I remember this. This was the morning of March 18th. It went down there. All the $3. That was crazy. We kind of missed this little bit of a pullback here. Below 10, this looks good. This still kind of looks good. I think where is it here in the portfolio? UFI? GII? Oh, we need to add to GII. Where is it? Oh, that just needs to be added. Add to GII. I'll go heavier. I kind of like, I'm trying to be quick, but you can see what I see, right? Pretty solid cash flow to EBIT, like solid business operating performance. What's net margins? Thinner net margin. I mean, thin net margin, nothing big, nothing fat, but those are the ones I'm dealing in. Solid historical tangible equity growth, and that guy was buying. He's the CEO. He kind of controls the company. We'd pull it up to get the specifics of what his position is, how much he actually owns, but we don't have to do that now. I can see enough. The actual earnings, this is legitimate earnings in the past 6 years too. It's not like a huge turnaround is necessary. Maybe the growth slows down, but that's okay. Even if you're cranking out $1 or $2 per share, that ain't bad for a $10 share price. Even better. It's not super cheap, but it looks cheap to me. Couldn't you see this tripling? Well, how high did it get? It was at $30 in 2019. Oh, this is a buy. Done. Add more. Whoa. Yeah, I was going to say, it's this you could easily justify with the growth that you see here. I mean, are these acquisitions? I mean, always organic growth is better, but it looks like they were going on a little acquisition spree here. I mean, that's the nature of these types of businesses. They're acquiring the brands and stuff like that. So I've seen this before, and I've seen these fail before too, and I've owned some. But boy, what is trading below $4? What a killer. I mean, demand's going to go, even if demand, yeah, I like this. I can more easily see $30 to $40. I couldn't even see, I mean, forget $66. That's just forget about that. But I could see 25. I could see up to 40 with this. All right, add to GII. We at least need to get, I mean, why is it so much lower than UFI? I don't even know. 0.56 versus, it's because of the, how leveraged is it? It's not even that leveraged. It says safe. whatever this calculator's doing, it says safe. You know what I mean? I don't remember. Do you remember what it's doing? I don't know what it's doing. But it says safe. It's because of the strong operating cash flow historically. But people are saying it's not going to sustain because of all that's going on. I mean, sub $4 is ridiculous. Sub $8 is stupid cheap. I can concede that maybe 10 to 15 is kind of middle of the road, but leans more towards cheap. But if things totally collapse for the company and there's significantly less demand, and the market cap 500, you know what I mean? Like, that's a good market cap for me. All right, add it. Okay. No, we won't do TGI. We won't even do CNR right now. Although we should, because I was saying that I want to add to it, but it's a messy one. Gonna say that ain't a negative tangible book. Like it's a real tough one to value because you really need to do some pro forma stuff because of the merger, and then you can see this EBITDA, but this was pre-merger, and it gets kind of look at the share count jumps up. It's a messy one. We don't have time for it right now. And you see, look at that operating cash flow past 12 months up to $2. Cool. Oh, they got the updated data. They do have the updated data. Sick. I haven't looked at this yet. Wow, $1 over the past 12 months. That ain't bad. Yeah, I like this. But let's get to the daily movers. Oh, we got to start with that. We spent too much time on charts today. I told you. I warned you. We were spending too much time on charts, and you said just keep going. No, I'm just kidding. Daily movers. Let's go. What do we got? All right. I don't know. Biotech. I don't know. 35%. I can't pull that up. XPEL. Is this one that's Is this like a? No, that's not an aftermarket automotive product. Oh, that looks interesting. How come I don't know it? What? Not on my watch list? What is this? What? What? Is it a foreign company or something? That's kind of weird. How do I not have a consumer discretionary auto parts and equipment company on my radar? At a market cap, if there's like a market cap of 20 million, I don't care. The name sounds familiar though. Has anyone written anything on it? I mean, now it's probably not going to be cheap enough. I'm kind of just looking to see if it should be on my radar. Oh, it looks like this guy got it right? You say underwear to $30? Holy Toledo, he nailed that one. Oh, would have been a buying op right there. I don't even know. Why does this all say 0? That's kind of... Is it a new company? Did it... All right. And I'm just going to say 134 million in revenues. What's going on here? That's really small. Trades at 7 times revenues. Is this not a renew like a Tesla type company? There was one out there that I came across. I thought, oh, okay, 33% earnings report. No, protective films and coatings. Why is this not on my watch list? Okay. We got to keep moving, so I'm just going to say add that to watch list. I forget. It doesn't matter whether it's cheap, but let's keep moving. Bummer. All right, keep moving. Lincoln Education. Oh, yeah. Remember this one? It's one of those publicly traded educational firms. I mean, you know what I mean? Like they for-profit colleges and so forth. I remember it's been all over the place. I'm not going to touch this one. This one isn't a missed opportunity. These are messy. Look at this. I remember it went up 10x in like 2 weeks. It went from 22 cents to, yeah. Ugh. I was kind of watching it at that time too, but I didn't pull the trigger. Oh yeah, what's this one doing? I assume this was going to go bankrupt. Chap? You ever see Chap? It's an energy company. Oh yeah, see how it's not doing? Yeah. Nice miss. Wow, it still went up 5x there, huh? I don't feel like looking into that one now. That was one that I remember how I've been talking about how I regret taking some companies off my radar. That one I took off my radar turned out to be a good idea. All right, let's keep going. Crown Crafts, Textiles, that's a small company. Alpha, Semiconductor. I've looked at this one before. All right. All right, see, I'm looking for insider, but I'm looking for the moves, right? I'm looking at the industry, the color, looking at the market cap, and I'm looking for insider buying, something that gets my attention. Look at CNR here, huh? Sick. You get 8 separate insiders buying over the past 6 months, 2 million over the past 12 months, 400K over the past 3 months. It's looking like the best mover today. That's sick. Bullish. Wow, 4 billion in revs. I forgot that. Okay. CCL. Oh, yeah, this one was tough. I think, aren't some value investors getting whacked by this one? I looked. I never pulled the trigger. I thought about it. It's just too messy for me. It's like really leveraged and stuff. I'll pull this up if they get all the billboards, all the signs outside. A lot of them. But look, you'll see clear channel on it. Maybe you already know. But it never bounced back that strongly. Yeah, there could be a tremendous amount of upside. Is there anyone buying? I need to see someone buying it. Someone smarter than me. Hey, a lot of insider buying over the past 12 months. 1.5 million. Who was it? Oh, someone's selling. Scott Wells? Nope, that's nothing. Who's this? Andrew Hobson? Oh, sneak it in right before the year end. Was that August 16th? What is it, August 12th? Sneak it in there. Nice try. SNCR, I've looked at that one before. I think I owned it for a brief period. Oh, it didn't do much. It also didn't sell off much. I think they didn't have to file their financial statements a couple of... I need to see insider buying for that one. Nothing. All right, Brinker, Horizon. Oh, remember we were watching Horizon? Damn. Hope I'm not going to regret not pulling the trigger on this one. Oh, shit. This was one I took off my radar because I just thought there were more attractive risks out there. I'm going to have to say, I'm eventually going to say missed opportunity for this one, aren't I? I might have to. Let's do this. I don't know. I don't want to look into it. $6 is not that cheap, but $2. Did I miss my chance in June? Probably. It's kind of interesting. Fair value could be quite a bit higher. There's some PE firms that got involved. They sold I think they had an African business that they sold off, maybe in Africa. I think it was, and But they do the tow trucks. Yeah, we just talked about them. They're the ones, they do the tow trucks. And but super levered. But some PE firms get involved. They're trying to right the ship, but they had such a heavy. I think they had preferred equity too. I know. I try to shy away from those ones. That's why. Oh, it's on deck. We definitely just talked about this one. All right, let's keep moving. Tesla. Oh, 13% more. And CVGI up another 13% today. Was there any news on that? We know Tesla's news. The split, 5-for-1 split, right? Now everyone's gonna be buying. Is that what everyone's saying? Everyone's gonna be buying it now because it's cheaper. People could be selling to. That's the second quarter. Oh, we already saw that. All right, so no news. It was just getting bid up, maybe following the trend. It was decent company. When you see that up, kind of, there's definitely been some interest in small caps, I think. All right, so now how about on the downside? Let's go. This is like a rapid fire review of the daily movers. Maybe we should start with this rapid fire daily movers. Steinmart. Oh, they filed bankruptcy. I did own this for a very brief period. It was flat, a couple months maybe, back in like 2018, and I'm like, nah, going bankrupt. And then I haven't followed it for a year, but I'm not going to investigate that. Going bankrupt. And then some biotechs. Oh, I see a lot of dark green. That's all biotech or pharmas. It looks like pharmaceuticals, healthcare. Kind of down day for the healthcare. What's up with that? Wonder what that's about. Sometimes it's like a regulatory. Someone makes a some government agency will say something, or a political figure, whomever, it will say something, and then stocks sell off and that stuff. I don't know if that's this. It does. Could just be coincidence. But I don't really know any of these. I'm not going to dig into them. Could be opportunity. If you see anything there that sticks out to you, or what's worth checking out. I've looked at Trib. That's a real messy chart. Look like shit. It's not a misstep. It's up 5x, but I don't care. Oh, is it breaking out? No, now it's selling off again. That chart don't look good. See the chart? Okay, so TGI, that one worth investigating. Hey, Civio. Oh, we looked at that one. Oh yeah, we just looking at that one. What did our note say about it? Did we have a note about it? Yo, these notes are kind of coming in handy. Oh shit, maybe I did these notes after the fact. Oh, I think I did. Did I? Can I do Command F? I guess I can. Okay, that's okay. At least I know I can Command F in the future. Okay. Yeah, looking come right back. Like we said, I don't love it, but it would be a secular play. We'll see if it keeps on selling off here. All right, we're going to make it. Okay, fortunately, there weren't too many movers on the market today, you know? A Flex Shopper coming back to earth. That was that small cap one. That could look interesting. For here, on this pullback, I'd want to see the insiders, that insider who's been buying the whole damn time. I want to see him. Oh, there's been 2 million in insider buying past year. Yeah, no joke. This guy, Howard Dvorkin, he's talked about it too. You can do a Google search where he talks about the company. And he's buying, he's buying above all these prices, well above these prices, around these prices. But he has a lot of good things to say, and he's invested in the company. He's 10% owner, so he cares. But he was still buying in June. I want to see him do a big purchase, so keep your eye out. If we see FPay pull it's not a big position in the company. How big is it? I feel like I should have the Roaring Kitty portfolio in this view. Uh-oh, it's slowing down on me. Go, go, go. 0.3%. So it's you know what I mean? It's a real small position, kind of speculative. But I'll keep my watch for. I'm asking. We should say, watch for FPay insider buying. That's really it. Red Robin. I did like Red Robin. It was a bigger position, but it was a quick gain, and then I sold out. What's it doing now? We're going to have time to get to insider buying. We'll have a couple minutes real quick. Yeah, I got lucky on that one, huh? I trimmed just in time. I mean, I didn't trim on other ones. So I do the right thing on some, and I don't do the other ones. They kind of balance out. I don't like I like the risk just because everyone was just selling shit. They were selling everything. I'm like, all right, I'll take Red Robin then. Here, I don't know. I'm no expert on Red Robin. You figure fewer people are going to be eating at restaurants, right? I mean, everyone knows that. But that's what I mean. Now that's the thing. Here there was tremendous uncertainty, so much uncertainty that it goes boom, 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 boom. They just sell it off and they don't care. And then I think, well, it could be less worse than you think. And so that's when I buy. Then boom, and they're like, oh, I probably sold off that first month, and then it almost tripled, or it did triple. but then the uncertainty wanes, right? And then things become more certain. And now we're 5 months into this, and now I have no edge. My edge here is I'm freaking out less than everyone else, and my edge here is minimal, except for maybe it could still be undervalued, but it's just less. You know what I mean? It's more a sentiment type thing. Plus, it's twice the price right now. You know what I mean? So the edge is like, yeah, Roadrunner, Fuel Tech, F Tech. Oh, I don't own that one. Mine. All right, so that's good. Okay, let's insider buying. We got 4 minutes. I could just pull up the actual insider buying. More Xerox? No. Is there? No. Okay. Let's do this. I don't want to go through the spreadsheet. We don't have time to look at everything. Checkmate, checkmate. C-Core. Nah, I don't like that. Whoa, 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 whoa. How much? Not that much. Hey, that one looks interesting. Like marine type stuff, that gets my attention. Oh, terrible chart though, huh? Oh, I need to see more insider buying than that. Is anyone talking about it on Seeking Alpha? Third Avenue. Oh, no one's talking about it. What's the market cap? $63. Nah, keep moving. I'm not against that, but I'm not seeing enough here to get my attention. It's such an ugly chart. I would need more insider buying from someone, either insider or firm. This one always looked cheap. This one, MYL, don't they do the EpiPens? EpiPens, they sold off a while back. Boy, they never did bounce back though. Oh, look at this, a terrible chart. And I never did pull the trigger, but it was always on like, oh, that could bounce back. Here I thought, yeah, it was here this time last year. I thought, that looked cheap, but it never really did much. And then it just kept selling off. There's a terrible looking chart. And I don't have much of an edge because it's a bigger company. $2 billion. Oh, that's Macy's. Yeah, whatever. Let's keep going. Keep going. Couple minutes. Sempra. Seeing anything? I'm glad I zoomed in for this. That's good. Camping World. A little bit more on Camping World. But you know what? I meant to mention this. Abrams was selling. I talk about Abrams so much. He sold at $35.80, huh? He sold 8% and then another 9% props to him. He's down to $5 million. So when you see Marcus Lemonis there buying more, just remember Abrams was selling. Good move, Abrams. Although he's still holding, but $40 is a good price for that. But we'll see how much he holds longer. Something to keep your eye on. So sometimes you do want to check the sale, who's selling. Although usually it's buying that I'm focused on. Travelers, no, insurance, I don't care. Olin, oh yeah. Oh, this might be a buy. Oh shit. Oh wow, that one's struggling. Oh, okay. I like this. This didn't bounce back as strongly as I did. I used to own, and then I sold. I sold. I think I might have sold out of the position and put more into TSC. It's a chemicals type firm that used to pay a huge dividend. I don't know if they still do, but no. This is like add to OL. Like I'll add. We don't have time to go through the fundamentals right now, but that's a good find. I missed that the other day. What time they filed it? Okay. Anything else? Virtu. Oh, there were a good amount of. And then PRT. We said we got to buy PRTY. Right? Did I say that? Oh, yeah. Oh, I'm on the wrong thing. Uh-oh, I got to be careful with that, huh? Uh-oh. I was in the old note. Is PRTY there? PRTY, buy PRTY. Okay. Oh, it's 10. All right, well, we got through. I think that now we're back to where we were on Monday for insider buying. So we got through the daily movers, the insiders, and we went through the whole macro charts for a change. We did like an hour of damn charts. Oh, that's too much charts. But maybe next time what we'll do is we'll go through the charts for the Roaring Kitty portfolio, at least kind of reassess where we are that one. That's something that maybe we should do every couple weeks or something like that. And then I kind of like going through the insider buying and going through the daily movers. I feel like that's helpful. And then pulling up some of the fundamentals for some of the companies in the portfolio, and then some of the ones that look intriguing. We still haven't done much Seeking Alpha, like looking at those articles and stuff. I'm kind of surprised by that, but there's just been no time because I'm trying to catch up, right? We'll get there. I
All right, there's nothing else in there. I'm just trying to start closing out stuff, but I think we're good. Okay, 10 o'clock. Okay, I won't keep you up any longer, okay? Let me just cheers. Let's finish this up. All right, you have a nice night, and I will see you on Friday, all right? All right, peace out. Have a good night with some kitties here, all right? Let me get it. All right, peace.